Can you please confirm whether I'm audible enough?
Yes, madam.
Yes, thank you. So I'll be sharing the screen now. I hope you can see the screen as well. Now here we are going to continue the last week lesson. Last week, if I just go through the last week's slides with you as a quick recap. Last week we started discussing about audit evidences, right? So audit evidence, and then we were talking about audit procedures. If you can remember, we discussed about inspection, observation, external confirmation, what do you mean by recalculation, reperformance, analytical procedures, and finally inquiry. So those are the audit procedures we're gonna use. And we discussed that those audit procedures can be taken as risk assessment procedures, test of controls, and substantive procedures. Okay, now can you please mute your mics, mute yourselves? I'm getting any disturbances. Yes, okay, thank you. Okay, so those are the audit procedures and we discussed about all these things. Now, today we are going to do one interesting thing. Last week we couldn't start this section. We are going to audit accounts receivable and revenue. So we have two captions here. We are going to audit receivable, accounts receivables and revenue today. Now we discussed all these audit procedures last week and you know how to do test of controls, substantive procedures and everything because Ajwat sir has discussed those areas in previous lectures. Now with having all these things in our mind, this is a practical session. Like we are going to apply all these theoretical aspects in auditing accounts receivable and revenue. So listen carefully why I am telling this. I have selected only accounts receivable and revenue to explain all these audit procedures. So with the time constraints we have, we don't find time to discuss each and every caption. Like we have property, plant and equipment, we have purchases, we have cost of sales, we have expenses, and we might have inventory. There are so many captions in statement of financial position and income statement, no? But we don't find time to discuss all the audit procedures related to these captions. So that's why this lesson, this lecture will provide you the foundation. This is the introductory foundation lesson. So having discussed accounts receivable and revenue, having discussed how to audit these two captions, you will be able to apply that knowledge in other captions as well. So this lecture, purely we will be discussing about the audit procedures for account receivables and revenue. And then we have uploaded the materials for all other captions. So you will see there are 5 documents submitted to LMS. You can download them. This is the first one. This is the lecture slides for accounts receivables and revenue. And there are 4 other documents, Word documents and PDFs uploaded to LMS. You can refer them. So there are selected versions and full versions, selected test of controls and selected substantive procedures. And in addition to that, for additional reading, we have uploaded full test of controls and full substantive procedures. That means covering everything, all the captions. Okay, so hope you are clear about that. Today we are going to talk about accounts receivables and revenue. So listen carefully, pay attention, because if you can do audit for these two captions, then obviously you can design audit procedures for other captions as well. Okay, so here we're going to talk about two different things, right? You can see accounts receivable and revenue. Now these two are linked. That's why we have taken them together. First of all, we see the sources of accounts receivable. Sources of accounts receivable. Now, When it comes to sources, there are few sources where we can see, where we can identify accounts receivable. The first one is the most famous one, most important one, I would say. It says claims against customers from sale of goods or services. What do you mean by that? These are basically trade receivables. These are basically trade receivables. So how do you find trade receivables? How do you end up with trade receivables? That is basically by selling goods or services on credit basis. When you sell goods or services on credit basis, you end up having trade receivables. So the most of the companies and most of the people in Sri Lanka, we name trade receivables as what? We call them debtors. That is the famous word. We call them debtors. So those are debtors. Trade receivables are one source of accounts receivable. So this part is directly linked to what? Revenue. Revenue and trade receivables go hand in hand. And then second one, loans to officers or employees. That means the companies can give short-term loans to employees. You call it staff loans. And then loans to subsidiaries. If the company is having subsidiaries, companies can give loans. Those can be related to related party transactions. You call them related party transactions. So loans are there. Those are also accounts receivables. And then claims against various other refunds. It's a refundable deposit. We have kept a refundable deposit with one person. It can be for a renting of billed rent, or likewise there can be refundable deposits. So that deposit is an receivable, accounts receivable. And then claims for tax refunds. You have paid excess tax, so that excess amount is a receivable. Advances to suppliers. So you have paid advances, that is a receivable. So all these are sources for accounts receivables. So coming under accounts receivable, under that caption, you can find out all these things. But the largest part would be trade receivables. That means the debtors. So shown on balance sheet on net realizable value. What do you mean by net realizable value? In simple terms, in financial accounting, you have a definition, a descriptive definition. But in simple terms, when it comes to net realizable value, that means how much is the actual realizable value from this debtor balance, I would say. Now, take an example, debtors, that means trade receivables. Now, all the balances, let's say the full amount of trade receivables, sometimes it is not going to be realized. Why? There can be bad debts. Sometimes we are computing doubtful debts, allowance for doubtful debts. So some balances, we will not be receiving them. We will not be realizing them. So that's why you need to remove those unrealized balances from the total amount. So you take the trade receivables balance you take, and you deduct what? You deduct bad debts. Those are not going to be realized. That amount is not going to be realized. Bad debts, and then allowance for doubtful debts, Likewise, you are going to reduce these figures, deduct. Then you end up having this net trade receivables value. That is the net realizable value of these accounts receivables. So for all these sources, you have to take the net realizable value. Remember that. Okay. Now, audit risk of receivables. Audit risk. First of all, can you remember the audit risk? How are you going to compute audit risk? Audit risk. We are going to compute audit risk using 3 elements, as you have learned. What are the components of audit risk? You can take inherent risk, and then you can take control risk, and you can take detection risk. Okay, so in simple terms, audit risk means risk of giving an inappropriate opinion on the financial statements. That is the basic meaning of audit risk. Inherent risk means when it comes to a separate caption, let's say when it comes to receivables, before considering the controls, what is the risk of having a material misstatement? Let's say there are no controls, then what is the risk of having a material misstatement? That is inherent risk. Control risk, what is control risk? Risk of what? Risk of the internal controls not operating effectively. Internal controls might not operating effectively and they are failing to prevent, detect and correct material misstatements. So if that is the case, that is a control risk. Internal controls are failing to prevent, detect and correct material misstatements. Detection risk means now auditor is doing audit procedures, no, different audit procedures. Those audit procedures fail to detect material misstatements. That is the detection risk. So I'm not going to discuss all these things in detail because you have discussed those things in previous lessons, but you need to remember now. This is the application part. So this is the audit risk. So we are assessing audit risk. We are assessing audit risk here with regards to receivable. Now here it says with regards to these accounts receivables, audit risk is significant. Audit risk is significant means audit risk is high because of three reasons. What are those? Many incidences of fraud have involved overstatement of receivables and revenue. Now, now we are basically focusing on trade receivables. When you take trade receivables and revenue, both are very significant, both are very risky. Why? One reason is when a business organization, when a managers in a business organization, they want to inflate revenue. Inflate revenue means increasing revenue as a fraud. Take an example like this. Now let's say the manager's year-end bonus is computed on sales targets. Yearly revenue targets, sales targets. Now by the end of the year, they are computing, okay, our sales target is 3 million, but our actual sales value is 2.22 million. Let's say 2 million. Target is 3 million. Actual sales is 2 million. Now in order to get the bonus, you need to have 3 million sales. What can be done as a fraud? There can be frauds involved with managers where they produce fraudulent revenue transactions. So those are not actual transactions but fraudulent revenue transactions, 1 million worth of revenue transactions. So that is a fraud. They are inflating the revenue in order to show a good picture. Sometimes the other way around. They want to reduce taxes. They want to reduce taxes means they want to reduce the profit. In order to reduce a profit, in order to show a bad picture, they are deflating revenue. They are reducing revenue sometimes. So both can be there, inflating and then increasing and also decreasing revenue. So when the revenue is increased, as per the double entry system, there's a direct impact on trade receivables as well. When the revenue is overstated, trade receivable balances are also overstated. That's why these two captions are very risky. Now, most of the organizations, if they want to do a fraud, the most famous caption would be revenue. And as a result of taking revenue as a fraud caption, trade receivables are also very risky. So that is the first reason. Audit risk is very high for those two captions. Captions in the sense trade receivables, accounts receivables, and revenue. Second one, revenue recognition may be based on complex accounting rules. Now, especially when you take accounting for contracts, revenue generated in contract accounts, the revenue recognition point is very critical. Sometimes it is complex. So the revenue recognition is complex. In that case, there can be some errors, not only frauds. There can be some errors involved in those two balances. As a result of increasing revenue, trade receivables also increasing. Likewise, risky area. Third one, Receivables and revenues are usually subject to valuation using significant accounting estimates. Now, both these balances have accounting estimates. The most famous one, most important estimate is impairment. You have impairment of trade receivables. You call it ECL. Expected credit loss computations are there for trade receivables. When you do all these allowance for doubtful debts, all these ECL computations, you are using assumptions. All these are assumptions. Now, if I just say when it comes to ECL computation, you have probability of default. So, people who are in audit firms, you know these things, probability of default, PD. So that is assumption. You have to use several assumptions and come up with this percentage. So likewise, you are using so many estimates, assumptions, estimates. So those are, because of that, those are not exact figures, no. So anyone can argue with those things. So that's why those areas are risky. Likewise, now you need to understand when you are going to do an audit, we are talking about a risk-based audit. First of all, you are identifying the risk, you assess the risk, and then you go with all these audit procedures. When you start a risk-based audit, you need to analyze, you need to understand whether this is a high risk area or low risk area. Then only you will be able to continue with the audit procedures. Okay. Now with that, the next slide it says objectives for the audit of receivables and revenue. What are the objectives? Now, first of all, you need to identify, use the understanding of the client and its environment to consider the inherent risk. So previously also I mentioned in order to compute the audit risk, you need to understand three components, three control risks, three risks basically. Inherent risk, control risk, and detection risk. So when it comes to the inherent risk, in order to understand the inherent risk, you should have to understand the environment first, business organization first, client first. So having understood all these clients and its environment, you can understand the inherent risk. Okay, before thinking about all these internal controls, what is the risk of having a material misstatement here? Inherent risk. Now, revenue is inherently risky area because of the reasons we discussed. Trade receivables, inherently a risky area because of the three reasons we discussed in the previous slide. So, inherent risk you have to take. And then obtain an understanding of internal controls over the receivables and revenue. Now, having understood the inherent risk, now you are going to check the internal controls. Now you check, okay, what are the internal controls established in this organization for revenue and receivables. So you need to have a good understanding about the internal controls. Why? You are doing test of controls as well, no? You are testing the controls. In order to test the controls, first of all, you need to identify what are there. Okay, so you can do all these things using a system study. Now, when you start as in the audit firm, when you start, let's say you are starting to audit revenue and trade receivables, you need to do a system study first. System study means you need to study the whole revenue process first of all. Obviously, you can get the working papers from the previous audit file, but that is not enough. You need to go through it, update it, and then you have to go through all these documents and understand what is happening. What is the revenue process? What are the products? What are the divisions? What are the roles and responsibilities? What are the discounts? What are the policies there? Likewise, system study. This is how you are going to understand all these things, internal controls and everything. And then part C, third element, it says assess the risk of material misstatement and design test of controls and substantive procedures. Now you understood the inherent risk. Now when it comes to revenue and trade receivables, inherent risk is high. And then you understand, okay, what are the internal controls placed? Now you have a good understanding about the internal controls as well. Now, having understood all these risks, you have inherent risk and the control risk. When you study the internal controls, you can have a good understanding about the control risk. Now, what is that? Inherent risk and control risk. These two can be used to inherent risk and control risk. These two are related to what? Wrong. Risk of material misstatement. You can assess the risk of material misstatement using these inherent risk and control risk. Okay, so that is the one. Okay, so having assessed the risk of material misstatements, now you are going to design the audit procedures. What are the audit procedures? You need to design test of controls and substantive procedures. We have discussed all these things. Last week also I discussed about test of controls and substantive procedures. Okay, so this is the order. Inherent risk, and then you study internal controls. Then you have the control risk. Using inherent risk and control risk, you can assess the risk of material misstatements. You call it ROMM. Now, having assessed the risk of material misstatement, you can decide the test of controls and substantive procedures. So, now you need to consider, with these all 6 points, you need to consider the audit assertions when you design both test of controls and substantive procedures. So, you need to substantiate the existence of receivable. Existence for receivables means receivable is a account balance or class of transaction. Receivable is account balance. So existence of receivables and the occurrence of revenue. So why occurrence for revenue? It is a class of transaction. Remember that. Existence for account balances, occurrence assertion for class of transactions. So existence and occurrence, and then establish the completeness of the receivables and revenue transaction. Whether all these revenue transactions have been recorded, completely recorded, completeness should be there. Verify the cutoff of revenue transaction. What do you mean by cutoff? I discussed that last week. Cutoff means whether all these revenue transactions have been recorded in the correct accounting period. There can be some frauds or some errors maybe. Now let's say the year end is 31st December. Now in this year, let's say 2022, December 31st is the last year. Now after that, from January onwards, it's a new year, right? 2023. 2023 January sales also have been recorded in 2022. So do we have cutoff there? No, it's not recorded in the correct period. So those are cutoff issues. So you need to verify whether there are cutoff issues as well. Determine that the client has rights to recorded receivables. Rights to recorded receivables means whether the company is having a right to all these trade receivable balances. What do you mean by that? Now think about the trade receivables. Sometimes, even though trade receivables are there, the company doesn't own those trade receivables. Company doesn't have a right over the trade receivables. What are the situations where we find those issues? If the company has factored out, if the company has used factoring, using those trade receivables, the company doesn't own those trade receivables because we have factored them out. So I'm sure you know about factoring, so I'm not going to explain. If the trade receivable balances have been factored out, you don't have a right over those balances. So you need to check that. Right to recorded receivables. And then of course the valuation of receivables. So you need to take the net realizable value, you need to deduct the impairment, that means allowance for doubtful debts, bad debts and everything. So the valuation should be correct. And then the accuracy of revenue. All these transactions should be in correct value, accuracy. And then determine that the presentation and disclosure. So there are ways of presenting these revenue and accounts receivable balances in the financial statements. Not only the main financial statements. Now you know notes to financial statements, the last element. So there also under notes we have to give detailed breakups, not the very detailed breakups. But let's say when it comes to revenue, sometimes they are showing product wise and then division wise, segment wise details. You have to show all these breakups of trade receivables. Likewise, presentation and disclosure should be there. So by designing these test of controls and substantive procedures, you are going to check whether all these assertions are covered for trade receivables, that means receivables and revenue. Okay, so those are the assertions. You need to remember these assertions. So not only trade receivables and revenue, for other captions also, though you have to understand what are the relevant audit assertions, management representations. Okay, let's move on. Now, first of all, we are going to talk about the internal controls. Now, we discussed we have to take the inherent risk, control risk, and then risk of material misstatement, and then designing the audit procedures. So you need to talk about the internal controls as well. Internal controls over accounts receivable and revenue. Now, how many components are there in a sound internal control system? What do you think? In an internal control system, give me a second. Okay, so how many elements are there? Now there are 5 elements in an internal control system. What are those? Control environment, and then risk assessment, and then control activities, monitoring control, and the information system. So the fifth one, that is the first one actually, that is not mentioned here. There are only 4 mentioned in these 2 slides, but the fifth one is also missing. Information system, information and communication, that is the fifth one. So control environment. When you understand internal controls related to accounts receivables and revenue, you need to understand, you need to analyze the control environment. What do you mean by the control environment in the organization? Basically, tone at the top. Now, when you take board of directors and senior managers, they are creating this control environment. Whether they are accepting the internal controls, whether they are supporting these internal control systems, whether there is awareness of the internal control system in the organization. What is the attitude about the internal controls? That is the control environment. So whether there's a good culture in the organization where all these employees are valuing the importance of internal controls. Are they practicing all these things? That is the control environment. So importance, this control environment is important because of risk of intentional misstatements of revenue. Now, if there's a good control environment, there's a less chance to have risk of intentional misstatements. So intentionally, these employees, directors, managers won't do misstatements for revenue and receivables. If there's a good control environment, if there's a culture to adhere to all these controls, employees won't do. I'm not saying 100%, but up to a good extent, they won't do all these frauds related to manipulating revenue, manipulating receivable, if there's a good control environment. So this control environment can be analyzed. You can decide whether there's a good control environment or not based on different factors. So if there is commitment to integrity and ethical behavior, it would be a good control environment. All these people, all these employees are behaving ethically. Directors are valuing them. They are very ethical. They lead by example. So that is ethical behavior. And their independence of board and audit committee. Audit committee is very independent. They are doing a good job. They are evaluating. They are reviewing all these internal controls. That is a good control environment. And the board also, they understand the importance of internal controls. So they are supporting the culture. And then structure, lines of responsibility, commitment to recruit, develop and retain competent employees. Why? If there are competent employees, if they are qualified, experienced, ethical, good employees, they will support to establish the internal controls. and also holding employees accountable. So this is about the control environment. So when you understand the internal controls over accounts receivable and revenue, first of all, you need to check the control environment, whether there's a good control environment in the organization. And then risk assessment. Risk of misstatements of revenue may be high based on its nature and complex rules regarding revenue recognition. You are assessing the risk. When you are assessing the risk, when it comes to revenue, risk will be high. We discussed that, right? Due to 3 reasons, risk for revenue and accounts receivable is high. And then control activities. So these are the so-called internal controls. These are the internal controls. So control environment, you need to establish all these control activities and internal controls in the organization over accounts receivables and revenue. So as the auditor, you need to understand whether these control activities are there. Now, when I talk about internal control, can you remember the easiest way to remember these internal controls? A shortcut? I think I will discuss that. Can you remember spam soap? Can you remember this one? Spam soap. So using these letters, you can easily remember the internal controls. So these S means segregation of duties, P means physical, A means authorization. Likewise, different internal controls are there. For each word, you can remember the internal controls. So basically, you are checking whether these internal controls are there related to. So you are understanding the internal controls. So let's say preparation of sales order. There should be a sales order preparation, that is a control. And then approve of credit. When you have credit sales, when you have debtors, before giving the goods on credit, you need to approve the credit limit for all these customers, and not just establishing the credit limit, that should be approved as well. So approving credits, issue merchandise from stock, shipment, billing. Now can you see preparation of the sales order, setting the credit limit, issuing the stocks, shipment, billing, all these are what? Segregated. Segregation of duties should be there. So you are checking whether all these activities are performed by one person, or there are different persons to perform all these tasks. If that is the case, segregation of duties is there. And then invoice verification before paying, entering to the system. Invoice balances, the accuracy about the values, those should be verified. And maintenance of control accounts, maintenance of customer ledgers, approval sales returns and allowances, authorization of write-offs of uncollectible accounts. Now, before you write off all these bad debts and uncollectible values, those should be approved. So all these controls should be there, and this is just a summary. We will be discussing about the controls in detail later, but remember, internal controls should be identified under control activities. And then of course monitoring. You need to not just establishing the internal controls, you need to regularly monitor. So under corporate governance we discuss, so we need to review these. Board of directors are responsible for reviewing these internal controls at least annually, I would say. So monitoring is very important. All these internal controls should be monitored. Okay, so that is about the internal controls. Now there are a few documents to be understood before you go in detail to revenue and trade receivables. When the customers are purchasing, the organization should prepare a purchase order. So internally we are creating that purchase order, sales order, and then bill of lading for shipping. The shipping company, we have prepared the bill of lading. And then the billing, when it comes to billing, when you are sending the amount to be paid to the customer, there should be an invoice. Obviously the invoice should be prepared. And then control listings for cash receipts. When you receive cash receipts, control listing should be prepared. Authorizing adjustments to accounts receivable, that should be a credit memo. Using a credit memo, the respective manager, a responsible party, is approving all these things. Likewise, these are few documents to be remembered when it comes to revenue and trade receivables. Okay, now since we are talking about revenue and trade receivables, this sales system. Now this is the one I told you. This is just a summary. In order to understand this process, you have to do what? A system study. You need to study the system first. Then you can understand the process. Okay. So in this one, which is a sample process, the sales system starts with taking the order. The organization takes an order and then document the order. You have sales orders because we are taking orders in different ways. So you are documenting this order and then you make the order. That means you are processing the order and then raise goods dispatch note. When the goods are dispatched, you raise the goods dispatch note and then after preparing it, you dispatch the order. You send the goods away to the relevant customer. And then after sending them, now you are raising the invoice. Now with all these details, these items, dates, everything, you are raising the invoice. And then account for invoice. You are entering that into the system, accounting for the invoice. And then you dispatch the invoice after preparing it, after accounting it. You are sending the invoice to the customer. And meantime, you send statements as well. So there can be a control in the organization. Monthly, they are sending the statements to the customer. Now, hi, blah, blah, blah. You can write the name. You can mention now your company is owing this much of value to our company for the sales order or invoice number, this one. Likewise, with all these details, you are sending the statements. Up to today, this is the balance you need to pay us. This is the debtor balance. So statements are sent. And then using both these things, you are chasing the payment and then you receive the payment. This is a sample sales study, sales system. Now in your organization, when you do actual audits, your sales system can be different. That is okay. Organization to organization, sales recognition, sales systems are different. So this is a sample system. And then of course you can use flowcharts to show these processes. This is a credit sales system. This is the same as the previous one as well. So you have 4 segments: sales, credit, finished goods, and then shipping. So remember these symbols, right? When you start a process, always you start like this. Now here, when you show documents, you are using this shape as a symbol. Likewise, different things are there. And then when you start from a customer, you are receiving an order. For them, it is a purchase order, right? They are purchasing. They are sending us a purchase order. Now, looking at that one, input sales order data. By looking at their order details, you are inputting them into the sales order data. And then approving the credit, whether we can supply, whether we can sell goods to this customer, whether this customer has already increased his or her credit limit. Likewise, before dispatching, before processing the order, you need to check the credit. You need to approve the credit limit. If that person is already exceeded the credit limit, then you will have to have special approvals. You need to make a decision whether we are exceeding the credit limit. So from senior people, you will have to have approvals, authorizations for that. So likewise, looking at the customer file and entering them, approval credit is there. After approval, approved sales order file. Now previously you have recorded the sales order. After approving the credit limit, approved sales order file will be there. And then release goods for shipping. Everything is okay, you release the goods. So goods, input sales data and generate bill of lading. When you are dispatching, you are the input sales data and you generate the bill of lading. And then ship goods. Goods are shipped and then goods are received to the customer. Meantime, you are sending the shipping files and then the bill of lading to the customer. Likewise, you have to talk about the payments as well. You have to receive the payments from the customer as well. So this is how you show a process in a flow chart. That is just an example. Okay, now risk assessment for the audit of receivables. Risk assessment. Now previously I discussed that. It is again mentioned here. First of all, you need to understand the client and the environment, and you need to get the inherent risk. Inherent risk first. And then you obtain an understanding about the internal controls. What are the internal controls placed in the receivables and revenue? And then what you do? Using the inherent risk and the internal control, that means the control risk, you can assess the risk of material misstatement, that is Raman. Remember that order, right? Inherent risk, internal controls, then the control risk. Using those two risks, you can compute the risk of material misstatement. And then after identifying the risk of material misstatements, let's say risk is very high, you will have to do more audit procedures. Risk is low, then you can do less audit procedures. Likewise, you can decide what are the audit procedures we're gonna do. Okay, so you have assessed the risk of material misstatements, and now you are in the process of designing the audit procedures. So here, when you understand, now I said understand in the client business. When it comes to revenue and trade receivables, what are the things you need to understand? So I'm saying understand in the client business. What are the things you need to understand with regards to revenue and trade receivables? The types of products and services. As the auditor, you need to have a good understanding about, now you are like a company employee now. You need to understand each and everything happening in the revenue system. What are the goods? What are the services? What are the types? What are the sizes? What are the brands? Everything you need to understand. And then the classes and categories of the client customers. What are the customers? Are there cash customers? Are there credit customers? Some organizations are doing transactions only on credit basis, no cash transactions. Some are only cash transactions, no credit balances. Likewise, you need to understand the customers. There can be local customers, there can be foreign customers, so you need to have a good understanding of that. Whether the business is affected by seasonal or cyclical demand. What are some products having seasonal demand? Let's say garments, when it comes to New Year and December, Christmas functions, the sale is going up. Agrochemicals, now you may heard about the Yala and Mahakanda. So when those seasons are coming, the demand for agrochemicals increasing. When it comes to festival seasons, demand for paint products, construction products increasing because people are painting their houses and renovating likewise. So these are seasonal products. There are so many seasonal products like that. Those are few examples. So you need to understand that. Now, can you remember previously last week when we were talking about the audit procedures, I had that example for analytical procedures. So there were seasonal elements, right? April and December, revenue is increasing. Why? The revenue is a seasonal revenue there in that company. Likewise, you need to understand those things. Typical marketing policies for the client and industry. Policies regarding pricing. What are the pricing policies? There can be a lot of things, right? Price skimming, penetration, sales returns. What do we accept sales returns? What is the policy? What are the discounts? There can be different types. Extension of credit. Are there any situations where we can extend the credit limit? Delivery, everything. Compensation arrangements that are based on recorded revenue. Typical revenue recognition principles. Likewise, you need to have an understanding about client's business. Okay, and then here, fraud risk related to receivables and revenue. I told you from the beginning, these two captions, receivables and revenue, they are very risky and there can be frauds. When managers want to do a fraud, they pick revenue because easily they are increasing revenue, not very much easily. They have to override internal controls, they need to have collusion, they get together and do these frauds. But intentionally they can do things, manipulate these balances. Understand controls established by management to control risks. Now since this is a very risky area, revenue and trade receivables, you need to check whether there's a fraud risk as well, whether the fraud is high in this organization. That is why you need to have a good understanding about the controls first. Because if there are so many good controls, if there's a sound control system, most of the time we can avoid those frauds, but not 100%, right? Even though there are best internal controls established and reviewed in the organization, still there can be frauds. So it is not a 100% assurance, but there should be internal controls. So you need to understand those. And then determine controls have been implemented. Whether whether these internal controls are operating effectively or not. Whether they have been properly implemented in the organization. And response to risk. Now, when it comes to the fraud risk, that fraud risk can have an overall effect on the audit. Not only revenue, there can be overall effect on the audit as well. In that case, you will have to alter the design of audit procedures. When you understand, when you realize the fraud risk is very high, then you will have to change your audit procedures. Previously, you thought of doing inquiry and analytical procedures and everything. But now the fraud risk is very high. You will have to increase the sample size. Not only that, you will have to do more and more audit procedures. You will have to recalculate, you will have to reperform, you have to call confirmations from the debtors. Previously, since the risk was not very high, you decided not to call confirmations from debtors, but we'll just inspect the documents and verify. That was the decision. But now you understand there are fraud risks. There is a high chance of having frauds in the company with regards to receivables and revenue. Now, in that case, you will have to call confirmations as well from the debtors. This is one example. So I'm telling you, you will have to alter the design of audit procedures if the risk of fraud is very high. And performing procedures to address risk of material misstatements due to management override of internal controls. If there are possible frauds, that means management doesn't care about the internal controls. So override of internal controls, they don't care, they don't use them, they just do whatever they want. Management override of control can be there. So you need to be careful with that as well. Okay, this is how you address the fraud risk. With that, we are going to talk about the potential misstatements of revenue. Now, we are saying from the beginning there can be material misstatements with regard to revenue and trade receivables. Now, what are these misstatements? What are the potential misstatements with regards to revenue? These are few examples. Now, look at the first one. We can say recognizing revenue not yet earned. Revenue not yet earned, but it has been recorded in the books. It has been recorded in the system. So if you have recognized revenue which have not yet earned, what will happen? Revenue overstated. Revenue overstated. Revenue has not been realized yet, not been earned yet, but you have recognized it as a revenue. So maybe it will come to next periods, but for this period you have recognized it as a revenue. Now, this misstatement, there can be misstatements, right? It can be material or not based on the audit, but let's say it's a misstatement. This misstatement can be due to two reasons. You have learned that misstatements can happen due to two reasons, Lamai. What is the first reason? Due to fraud or due to error, or both. So let's say misstatements can happen due to fraud, misstatements can happen due to error. Now this is the example. If it is a fraud, what has happened? Now recognizing revenue not yet earned. Not yet earned, but you have recognized the revenue. If it is a fraud, what has happened? It is example. Recording fictitious sales without receiving a customer order or shipping the goods. Can you remember the example I told you? Now the managers have recorded fictitious sales in the books. Why? They wanted to inflate the revenue figures just to achieve their sales target. So in that case, that is a fraud, right? That is a fraud. So recording fictitious records, you don't have a sales, you don't have shipping, you don't have shipped goods, you don't have a sales order, I mean customer order, but still you have recorded a sale. That is a fraud. And intentional overshipment of goods. Intentionally you have overshipped. There can be agreements with the customer, or there can be some changes in the shipments where you get additional goods from the company. Then the managers can sell them individually and earn money. So there can be frauds like that. If it is a fraud, those are the examples. If it is an error, it is not a fraud. It is not a fraud. It is not intentional. Unintentional errors can also there. As a result of errors also, recognizing revenue not yet earned. What are the examples for errors? Recording sales based on the receipt of orders from customers rather than the shipment of goods. That means you have messed up with the revenue recognition point. You have recorded not intentionally, unintentionally, erroneously, you have recorded sales based on the customer orders. You can't recognize sales based on customer orders now. You have to ship them. That basically, as per SLFRS 15, performance obligations should be there. So in this case, without shipping them, without considering whether those goods are shipped or not, you have recognized revenue based on the customer order. That is not intentional, but unintentionally, mistakenly, the accountant has done that. In that case also, misstatement can happen. The same misstatement is there. And also inaccurate billing and recording of sales. Values are different. Values are wrong, incorrect. Recording cash that represents a liability. Receipts of customer deposit as a revenue. Customer has kept a deposit. Prepayment, but now that prepayment, that deposit has been taken as a revenue. So that is again revenue not yet earned, but taken as revenue. So now I think you have a good understanding about the misstatement. And remember, misstatement, the same misstatement can happen as a result of fraud or error. These are the examples. Now we see the next column as well. We'll read this column as well. Internal control weaknesses or factors that increase the risk of the misstatement. Now if there are frauds like this, now this no sales orders, no shipments, but the sales have been recorded. Not yet earned, but recorded. What are the weaknesses? Ineffective board of directors, audit committee or internal audit function. Tone at the top, not conduct conducive to ethical conduct, undue pressure to meet sales targets. All these factors affect. Now the board of directors are not doing their job correctly, right? They don't have put all these appropriate internal controls. They have not checked these fraud risks and everything. That's why frauds are happening. Okay, so those are the weaknesses. And if those are errors, let's say the errors are there, not intentional, but mistakenly they have done these things. As a result of that, revenue has been increased, but not yet earned. Ineffective billing process in which billing is not tied to shipping information. This can happen because the invoice and the shipping documents have not been matched. Now, if they have matched all these documents, if they have done three-way matching, then they are not recording an incorrect value. So that is a weakness, internal control weakness. ineffective controls for testing invoices, or ineffective input validation checks and computer reconciliations to ensure the accuracy of databases. Accuracy of the databases is not there. The valuation, if one person has checked or verified all the details in the invoice, then the invoice values are not getting incorrected. So all these are correct. Then the correct value will go to system as well. Then this misstatement would not happen in that case. So all these are control deficiencies, control weaknesses. Inadequate accounting manual and incompetent accounting personnel. Sometimes there's a trainee. Trainee is doing all these processes. Now that person is not well trained. He or she doesn't understand the process well. Then again, misstatements can happen. So those are the examples for frauds and errors and internal control deficiencies examples. Now we'll see the second one as well. Early. I'm not going to explain all these examples from the second point onwards. I'm just focusing on the misstatements now. Now, having analyzed this section, the first section, now you know how to read this, right? So you have a lot of homework for this lecture. You have to read this, you need to understand this, because all these things will be tested in the examination. And not only that, you need to read the additional readings as well. So take your time, don't wait till the last moment. Before the exam night, you can't finish everything. That is a lengthy document, so you need to read and understand. So the second misstatement. Now the first one is recognizing revenue not yet earned. Second one, early or late recognition of revenue. That means cut off. This year's sales have been recorded in the next year. That is late recognition. Or else next year sales have been recorded in this year. Now January 1st sales have been recorded in 31st December. Early recognition. There can be frauds, because if they want to increase the sales, they can take next year's sales to this year and use a good picture about the sales. So there can be frauds, and also there can be some errors. Mistakenly a date has been missed. They can record the sales in an incorrect date. That is a cut-off issue at the end. Likewise, early or late recognition of revenue. Basically, you call it cut-off problems. And you can have recording revenue when significant uncertainties exist. Now, let's see, since this is a bit fishy, let's read the fraud as well. Overestimating revenue by underestimating the effect of customers' rights to return goods. You don't consider the possibilities of goods returns. You don't consider those uncertainties exist, but you just record the revenue as final. So even though you have recorded them as revenue, final figure, still you have returns. So when you have returns, the revenue is not there, right? So there can be misstatements with regards to returns as well. And then the next one, recording revenue when significant services still must be performed by seller. This is most importantly for contracts. Now let's say recording franchise revenue when the franchises are sold, even though an obligation to perform significant services exist. Likewise, some of the performance obligations have not been met yet, but revenue has recognized. So that is again a mistake. Another one is overestimation of the amount of revenue earned. Sometimes the numbers for 1,000, the person who is recording the sales recording as 10,000. There can be overestimation of amounts of revenue earned like this. There can be both frauds and errors. So these slides, three slides, you can read and understand. Everything is mentioned, whether it is a fraud or whether it is an error. If it is a fraud, what are the examples? If it is an error, what are the examples? Now we are slowly moving to the audit procedures. That is the main purpose of today's lecture. That's why I'm skipping those misstatements. You can read them, but you need to have a good understanding about the audit procedures. Then only you can analyze, you can read the supplementary readings as well. Okay, now if I just go back here, now we are going to have understand the inherent risk of the revenue and accounts receivable, and then we analyzed, obtain an understanding about the internal controls. There you understand the control risk. Having both inherent risk and control risk, you assess the risk of material misstatement, and then what you do, you design the audit procedures. So A, B and C. Now see here is the next one, D. I just wanted to show you the link. So in your slides also take that note, because there's this misstatement part, fraud risk, and this slide coming in between A, B, C, right? So A, B, C, and then it continues as D here. Now designing of audit procedures completed. With regards to part C, we assess the risk of material misstatements and design the audit procedures. Now this next one, fourth step, D, perform further audit procedures. Now you are going to perform the audit procedures. Now when it comes to audit procedures, there are two TODs, test of controls and substantive procedures. Now first we look at the test of controls. You are checking the test, you are testing the internal controls established in the organization. So what are the test of controls? Examples for test of controls. Examine significant aspects of a sample of sales transaction. This is just a summary, Lamai. We will be discussing the test of controls in detail, but as a summary, overall figure, compare a sample of shipping documents to related sales invoices, review the use and authorization of credit, you check whether the credit limits have been approved, reconcile selected cash register tapes and sales tickets with sales journals, test IT application controls, examine evidence of review and approval of revenue estimates. Likewise, these are few examples. Okay, if necessary, revise the risk of material misstatement based on the results of test of controls. So you do the test of controls first. Now before that, now this is an additional information. Before you do test of controls, now how are you going to do test of controls? From the revenue, full list of revenue transactions, you're going to pick a sample. You're going to pick a sample, and then for each and every transaction, you are checking the controls. You are testing the controls. Before testing the controls, you can do this one. You can do a walkthrough test. A walkthrough test. Now, in ABC, you understood the internal controls. No, basically in part B, you understood what are the internal controls. Having understood the internal controls, you can pick one or two revenue transactions from the total list, and then you can walk through the process. So from the beginning to the very end, you are walking through the transaction to check whether all the internal controls are there. Basically, you are checking the design effectiveness of the internal controls. So you are doing a walkthrough. After doing a walkthrough, now you realize, okay, internal controls are there. If you just realize after doing a walkthrough there is nothing, you can't do test of controls. No, that is the whole purpose of doing a walkthrough. So doing a walkthrough, you understand, okay, there are controls, we can proceed with test of controls. So having done the walkthrough, you are doing a test of controls. So you are, for all the sample transactions, you are checking the controls, testing the controls. Now let's say, as the results of the test of controls, one result is, okay, controls are very good. There are good controls. So let's say control risk is low. Controls are very good means what? Control risk is low. If the control risk is low, what about the amount of, what is the quantity of further audit procedures you need to do? Can you reduce the audit procedures you're going to do as substantive procedures? Of course, yes. If the control risk is low, if you identify after list of controls that the control risk is low, you can reduce your further audit procedures. If the control risk is very high, that means that established companies' internal controls are not performing well. Then obviously you will have to do more and more further audit procedures, substantive procedures. You will have to do more test of details. You will have to do more substantive analytical procedures. Okay, so remember that as well. Okay, we are going to talk about relating to controls. What are the controls related to revenue and trade receivables? And then what are the typical tests of controls? Now, make sure you differentiate these two. Controls are there in the organization. Now, control can be there. We are approving all the credit limits for each and every customer before we are going ahead with the transaction, shipping the goods. We are checking the credit limits. That is the control placed by the organization. Then what do you mean by test of controls? Test of controls is not the authorization of credit limits, Ramai. Now I have seen most of the students mess up with this control and test of controls. Control is the authorization of credit limits by the employees of the organization. A manager will authorize the credit limit. Test of control is you are testing whether that control is there. How do you going to do the test of control? You are checking for evidence for that control. Now, test of control means you are checking whether all these invoices have been authorized for the relevant credit limit. Then you maybe when the control is done, when that manager is performing that control, he or she will put a signature. Okay, that means with a small note, maybe credit limit checked, signature. In this physical environment, right? All these things are not happening. All these things are happening systematically. But as an example, I'm saying on the invoice itself, a manager is writing credit limits checked. Okay to proceed with the signature and date. That is the control. Now, when you are doing test of controls, you take that invoice and now you see whether that manager's signature is there, whether that manager has approved the credit limit or not. That is the test of controls. Okay, remember that. So in this chart, control is there, the test of control is there, and the assertions are there. What is the covering assertion? We have taken existence and occurrence, completeness, cutoff, all these assertions are there. Now look at the first one. Segregate duties over sales and collection of receivables. Basically, in the revenue process, tasks have been segregated. That is the control. Segregation of duty is a control. Now, how are you going to test this? Observe. You can observe. By observing, you can realize whether this segregation of duties is there or not. Observe and make inquiries. You ask the manager. You ask the manager whether you have segregation of duties. So observe and make inquiries about the performance of various functions. So I hope with this first example, you have a clear understanding about control and the test of control. And what are the assertions going to cover? Now, when you do this one, when the segregation of duty is there, existence and occurrence, and completeness, rights and obligation, valuation and accuracy, almost all four of these assertions are going to be covered up to some extent. Okay, so that is the covered assertions. Go to the second one and see. Match sales invoice with shipping documents, purchase orders and sales orders. Purchase orders means the order you take from the customer. From customer's point of view, that is a purchase order. No, they are purchasing it. So they put a purchase order. For us, it is a sales order. We record it as a sales order. And then we prepare the shipping documents. You are dispatch note maybe, and the shipping documents. And after that, you prepare the invoice. All three documents or all four documents should be matched. Basically, we are taking sales order and then the dispatch note and the invoice. That is why we call it three-way matching. Three-way matching. We are checking all these documents and see whether the amounts are correct. Same amount should be there. Whether the quantities are correct, same quantities should be there. If all these are correct, that means the exact ordered amount has been dispatched and invoiced for. So that is three-way matching. Now here we have purchase order as well. So that is, we don't call it four-way matching, but you match all these documents. So how are you going to check? How are you going to verify whether they have done this matching? Select a sample of sales invoices and compare details to shipping documents, purchase orders and sales orders. So you check and see. You also take all these four documents and see whether the consistency is there, whether the same amount has been recorded, whether the same quantity has been recorded. If that is the same, that means they have done that control as well. The control is good. So using this one, you are going to cover the occurrence and then cutoff, looking at the dates. When you look at the dates, especially dispatch note date and the invoice date, you can check the cutoff, whether these invoices have been recorded in the correct period and whether these invoices are having a right, whether this is our sales transaction or someone else's sales transaction, rights and obligation by all these details. And the valuation, you are checking the numbers, you are checking the value. So these are the valuation, means both accuracy, because a class of transaction, the accuracy of the value. So these are the assertions we're going to cover from this test of control and control. Third one, review of clerical accuracy of sales invoices by a second person, maybe the mathematical accuracy. Select a sample of sales invoices and examine them for evidence of second person review, whether a second person has actually reviewed this sales invoice. If so, there should be at least a signature, right? So the evidence should be there that the control has been performed. So you are checking that. So with that you can accuracy is covered with this control. And then obtain credit approval of sales prior to shipment, prior to dispatching, prior to shipment. Credit levels should be approved. So make inquiries. You can inquire about the credit policies and also select a sample of sales transactions and examine evidence of credit approval. What is this audit procedure? Inspecting or observation. This is inspection, right? I told you, when you examine documents, when you examine physical assets, you call it inspection. So you use inspection and inquiries as test of controls here. So you can check the occurrence and you check the accuracy as well. And then mail monthly statements to customers and follow up on errors reported. There's a control like that. Monthly they are sending monthly statements to customers. That is their control. How are you going to check that? Observe and make inquiries about the mailings of statement. You can check the emails and review evidence of follow-up. Not just emailing, whether they have followed up as well. So these are the assertions covered. Likewise, reconcile the bank accounts monthly. That is the control. You are reconciling all these bank accounts for cash receipts. Most importantly, what is the test of control? Review a sample of bank reconciliation performed during a year, whether they have actually done the bank reconciliation. So you ask for the bank reconciliation and you check. When you review, you inspect those things. Sometimes you are reperforming. So you can do a reperform one reconciliation and see whether that is accurate. And then use control listing to control cash collections. So you can observe, make inquiries about the process and reconcile selected listings to the bank and accounting records. So you are using several audit procedures here, right? As test of controls, you observe, you inquire and you reperform. And then use budgets and analyze variances from actual amounts. What is that? Examine budgets and evidence of follow-up on variances. You need to examine those budgets, whether they have actually analyzed the variances. Use pre-numbered shipping and billing documents and account for the sequence. Now, when you are using these pre-numbered documents, what is the main assumption you are going to cover? Completeness. Completeness. You can, if you take a invoice book, copy book, now when you go through 1, 2, 3, 4, and 5, if number 5 invoice is missing, okay, that invoice is missing and it is not recorded in the sales system as well, completeness is not there. All the transactions have not been recorded. There's a potential, right? It can be an error or it can be a fraud. So pre-numbered shipping and billing documents should be used. So how to check this? How to test this control? Observe and make inquiries about the use of pre-numbered documents. You are inquiring whether whether actually you are using pre-numbered documents, and inspect evidence of accounting for the sequence. And then use credit memoranda for authorization of adjustments to sales and receivables. This is same as approving the credit limits. And then use chart of accounts and independent review of account classification. Regarding presentation and disclosure, there can be a control like this. They are using a chart of accounts and independent review of account classifications. So you are checking that. Inspect whether there is a chart of accounts actually, and review the documents, review for those evidences, whether they have actually reviewed those classifications. So you are inspecting those documents and see. So I think now you have a good understanding about what are the controls there can be in a sales system and what are the test of controls. How are you going to test those controls and how are you going to match these things with audit assertions. Okay, now test of controls done. Now we are in, look at here, step E. We have covered A. We took an understanding about the environment and we got to know about the inherent risk. B. We analyzed, we understood the internal controls and assessed the control risk. Part C. We assessed the risk of material misstatements and designed the audit procedures. That is C. Part D. You perform the test of controls. Now you have done the test of controls. You have tested all the controls in the organization with regards to revenue and trade receivables. Now you have the results with you. Now you can decide what is the extent we are doing these substantive procedures. So you can do test of controls and substantive procedures now. Test of controls, based on the test of controls results, you are deciding the substantive procedures. Now perform further audit procedures. What is substantive procedures? I hope you have a good understanding about A, B, C, D and E now. Now we are in E. Okay, what are the substantive procedures we can perform? Obtain an aged trial balance. You call it aging as well. You call it trade receivables aging of trade accounts receivables and analyze of other account receivables and reconcile to ledger. You take the age analysis and reconcile it. And I'll show you a age analysis, aged trial balance in the next slide. That is one substantive test. And then confirm receivables with debtors. What is this audit procedure? Confirmation. That is also there, confirmation. Now review the year-end cutoff of sales transaction. You can do a cutoff test. That is also a substantive test. Perform analytical procedures for accounts receivable and revenue. Can you remember? Last week we did analytical procedures. You are computing trend and ratios. You are drawing trend analysis. All these things. You are performing analytical procedures. Review significant year-end sales contracts for unusual terms. Now, if there are fraudulent activities, most especially, if you can remember the sales-based bonus example, I told you there can be unusual sales big amounts at the end of the year because they have recorded fictitious sales transaction at the end of the year why they wanted to achieve their sales targets, managers. So review significant year-end sales. You have to specifically review those year-end sales if there are unusual numbers. Test the valuation of receivable, computation of interest income, interest receivables. So valuation of receivable, you can compute the allowance for doubtful debts. Of course, when you do audits, you are recomputing the ECL, right? Expected credit loss, you are reperforming, recomputing and see the accuracy. So you are checking the valuation. Evaluate the propriety of the client's accounting method for receivables and revenue, whether those accounting methods are appropriate. You are checking those through inquiries. You can check that. Evaluate accounting estimates related to revenue recognition. So you are evaluating all these allowances for doubtful debts and all these estimates. Determine the adequacy of the client's allowance for uncollectible accounts. Whether the allowance for doubtful debts they have computed is adequate. We have an example as well. So you are checking that adequacy. Sometimes you can, using all the details, the auditor can reperform the computation and see whether the client computed allowance for doubtful debt is adequate or not. Do we have to provide more or do we have to provide less? Likewise, you can decide. Ascertain whether any receivables have been pledged. So if you have pledged any receivable balance, if you have factored out any receivable balance, you need to check that. So you can use inquiries and check. Investigate any transaction with or receivables from related parties. There can be related party transactions as well. So you are doing transactions with other subsidiaries in the group. You have to check them. Evaluate the business purpose of significant and unusual sales transaction. Evaluate financial statement presentation and disclosure. Like all these things, these are only few. You can do more substantive tests. You can do these things as further audit procedures, substantive procedures. Now, did you realize both test of details and substantive analytical procedures are there? Now, if you take 1 to 13, the total list, some are test of details, some are substantive analytical procedures. How are you going to differentiate these two? Now, substantive analytical procedures, those are basically comparing trend analysis. You are using ratio analysis and all these things. So if you can understand the nature of substantive analytical procedures, all other audit substantive procedures are test of details. This is a very easy way of differentiating test of details and substantive analytical process. Now here, look at perform analytical procedures for accounts receivable and revenue. Is this a test of control or a substantive analytical procedure? Substantive analytical procedure. SAP. Let's say confirm receivables with debtors. When you call confirmations from debtors, are you going to compute some ratios or are you going to draw trend analysis? No, right? It is not a substantive analytical procedures. It is a test of detail. And can you remember the difference I told you last week? When it comes to test of details, you are checking transaction wise. But when you do substantive analytical procedures, you are applying all these ratios, when you apply all these trend analysis to whole system, like the total numbers, right? Not transaction wise. So for test of details, you check transaction wise material misstatements. So that is the difference. When you call confirmation, transaction wise, customer wise, that is test of details. And when you check, look at this as well, when you check cutoff, review the year end cutoff of sales transaction. When you check cutoff, that means you check one invoice. Now let's say at the end of the year, you check last 10 invoices for year 2022 and first 10 invoices for year 2023. Now, year 2022 last 10 invoices. You check invoice wise. You check one invoice, check the date and check whether this invoice has been recorded in 2022 or 2023. And then again, you check 2023 invoices. You pick one from 2023, the next year invoices, and you check the date. The date should be obviously 2023, right? If it is 2022, what has happened? You have pushed a sales transaction to the next year. So likewise, you are checking. When you are checking cutoff, you are checking transaction wise, invoice wise. That is a test of detail, TOD. So this is how you are differentiating TODs and substantive analytical procedures. This is an example for the aged analysis. You call it aged trial balance. How are you going to draw this? Now in this organization, these are the customers. So A, B, C, D. ABC, Extreme, Main, Trifect. These customers are there. And then the total receivable balance up to 31st December, August 31st, 2019. Up to this date, what are the balances? You can easily take it from the system. What are the debtor balances? Now, current. Current means 0 to 30. This is only 1 month, only between 0 to 30 days. After happening the transaction, only 0 to 30 days have passed. It is not above 1 month. Those are current. So, on the current baskets, you call them baskets. In this basket, 59,121. 59,000 is there. Next basket shows past due 1 to 30 days. Okay, now after that you have $3,000 balance. Now this is old. 31 to 60 days, there are no balances. 61 plus days, there are no balances. Now what has happened? This balance is somewhat okay, but this balance they have not paid yet. This is old now. This is called aging analysis. Based on the age of these balances, based on the invoices, you are putting these values into different baskets. Now look at here, extreme. When it comes to extreme, 18,000 balance is very old, 61 days plus. It is in this basket. So do we have to allow for sorry, it can be bad debts, and also it can be what, doubtful debts as well. So sometimes we will have to allow for doubtful debts as well for this 18,000 balance. So likewise, based on the age of the debtor balances, you can have this aged trial balance. So you take the total, and based on the invoice dates, you categorize into these baskets. I hope you got a understanding about this one. Okay, now here, this is again substantive procedures for receivables and revenue. Again a sample, right? So we were talking about substantive procedures, 1 to 13 we discussed. Again, obtain aged listing of receivables and reconcile to ledgers. Obtain analysis of notes, receivables and related interest. What is this? Test of details. What are the assertions we are going to cover? Assertions are valuation and accuracy. When you analyze the aging analysis, when you take this aging list, you can cover the valuation. How is that? How are you going to cover the valuation assertion? By analyzing the aging list. Now, by looking at the aging list, here you realize now extreme company, this balance is not going to be realized. Now this is 3 months late, still they have not paid this. So definitely we will have to allow for doubtful debts. Sometimes we will have to write off this balance as a bad debt. Now after analyzing, if you can analyze, if the auditor can analyze this aged trial balance, then auditor can make certain decisions whether the client has written off this balance or not. So after taking these into consideration, you are checking the valuation. Now when it comes to valuation, you need to deduct the impairment value. You need to deduct the allowance for doubtful debts. Here you go. You pick one example for allowance for doubtful debts. So after taking all these things, you are checking valuation and of course accuracy. Likewise, confirm receivables with debtors. You call debtor confirmations. You call trade receivables confirmation. Now, when you have the responses, let's say you got the responses from the debtor confirming the balances, you can verify the existence. It shows actually there's a customer like that. Actually, this debtor balance is existing at this date. Existence. Occurrence for these sales transactions. Rights and valuation. Rights means now now if the customer has actually responded to the auditor saying yes, this balance is to be paid by me, I will pay that in later days, that is the meaning of confirming the balance. That means this organization has a right. That shows that right. Let's say the customer is sending you a response, these are not balances, we don't have nothing to pay to the organization, so for that balance there's no right. If the customers are factored out, there's no right. So you are checking the rights as well. Of course, the valuation. If the amount mentioned in the confirmation is not correct, the customer will respond you saying this value is not correct. So valuation is covered. Likewise, for each and every substantive procedures, you can identify the relevant audit assertion like this. Primary audit objective. So let's take another one. Review the year-end cutoff of sales transaction. Cutoff list. You are checking the existence, occurrence, rights, and the cutoff. Right? These are the assertions. So the same procedures are there. Same substantive procedures are there. TODs and substantive analytical procedures both. You are going to check these assertions using these procedures. Okay. Now, you're talking about these confirmations of receivables, no? So what are these receivables? What are these confirmations? There are two types. Right? Receivables should be confirmed unless, now when it comes to trade receivables, more specially, you can call debtor confirmations. There are two types of debtor confirmations. We will discuss that later. So before sending these confirmations, you need to assess the risk. So most probably most of the organizations, they try to send confirmations. They try to call confirmations from the debtors. When the debtors themselves confirm the balance, is that reliable or not? Reliability is very high, right? We are getting the confirmation from a third party. We are not just inquiring the management. We are getting the confirmation from a third party. Now, receivables should be confirmed like this. Unless, now when it comes to these three situations, sometimes we are not calling confirmations. Why? What are those situations? Accounts receivables are immaterial. The balances are very small, no point of calling confirmations. Okay, account receivables are very immaterial. In that case, you don't have to call confirmation. The use of confirmations would be ineffective. That is pretty sure with the past experience, auditors are pretty sure they are not getting the responses from the debtors. Why? Most of the debtors are overseas. So there is lack of tendency of getting those responses from the debtors. So the confirmations would not be effective. So with the practice, with the experience, they understand no point of doing the confirmation. They don't send the replies. So then again, you don't have to do those things. You can go for alternative audit procedures, checking subsequent settlements and checking the invoices and everything. And the third situation is auditors combined assessment of inherent and control risk. That means what? What is the combined assessment of inherent and control risk? That is ROMM, right? Risk of material misstatement is low. Okay, risk is low. And the audit risk can be reduced to acceptably low level with substantive testing. ROMM is low. Detection risk will be also low with all these procedures. Then you don't have to call confirmation. If the risk is very low, then you don't have to call for confirmation. So in these three situations, remember that these are the situations where you don't have to call debtor confirmations. You are not required to call confirmation. But still, if you really want to call confirmation, you can go ahead, no problem. There's no rule saying you can't call confirmations. You can do, but not necessary. Okay, so confirmation of receivables. What is the process? It is a simple process. First of all, you have the debtor balance. After that, what happens? Confirmation request to ABC company prepare. You are preparing the confirmation request. And then CPA determines confirmation request is directed to appropriate confirming individuals and addresses. You are sending CPA means certified public accountants. Auditors are sending the confirmation request to the appropriate addressers and the individual. Confirmation request delivered to ABC company. ABC company is the debtor, no? Confirmation request is delivered. ABC company receives confirmation request. Now ABC company is opening the envelope and see, okay, now the request is with them. They have received it. ABC company confirming party receives and respond to confirmation request. Now they are responding to our confirmation request. Response is delivered to auditors. CPA receives responses to confirmation request. Okay, so this is the process. Basically, you are sending the confirmation request and you are receiving the reply. But this won't be the case for all the confirmations. Now, in this slide, we are going to talk about the two methods of debtor confirmation. There are two methods. One is positive confirmation. Second one is negative confirmation. Positive confirmations and negative confirmations. When it comes to positive confirmation, what is the meaning? You request addressed to the debtor asking for a reply. You are asking the debtor to reply. You are expecting a reply when you send positive confirmation. Okay, clear? You are requesting the debtor to reply. Give me a second. Okay. So you are requesting. Now, when you send positive confirmations, you can have two types. What is that? Ordinarily sent with balances due on them. One way is positive confirmation. You are expecting a reply. One way is you are mentioning the value to be confirmed. Now, it comes to rupees 1 million. In the confirmation request, you are mentioning the value to be confirmed and asking the debtor to confirm the balances. Okay, this is the amount you owe to this company. Please confirm this using a reply. Please send us a reply confirming the balance. You have mentioned the balance. Second way is what? Blank forms. You keep the value blank, leave amount blank. This is less. This is not frequently used, this method. Now, if you just keep the blank, if you just keep the amount as a blank, there's a less tendency that you will receive the responses, right? Because the debtor is lazy. Debtor will have to check all these balances and write the correct value as well. But if the amount is directly given, they can just check the balance with their system and confirm. So there are two ways anyway. You can keep the balance or you can leave the amount as a blank. There are two ways. Anyway, you are expecting a reply. Second one, negative confirmation. Negative confirmation means ask debtors to advise the auditor only if the balance shown is incorrect. You are writing the balance. This is the debtor balance. Please reply only if you do not agree with this balance. That is a negative confirmation. So, what will happen? Debtor will send you a reply only if that debtor is not agreeing with the balances. We don't get a reply means that we have to believe that debtor has confirmed the balance. There is no change. He has accepted. That is the case. So low level of assessed risk of material misstatement. You will use these negative confirmation if the risk of material misstatement is very low. Basically, you don't have to rely on confirmation. In Sri Lanka, now in practice, in Sri Lanka, what will happen? Negative confirmations won't work much, right? Because the response rate for positive confirmations is also very low. How can we expect negative confirmations, right? So we can't believe, we can't trust whether this, now the debtor has not sent a reply. Now we can't trust whether this person is actually agreeing with the balances or that person has not received the confirmation request at least. We don't know, but we are not getting a reply. Large number of small balances. This would be okay if there are large number of small balances. Then only the differences, only the balances which have differences will be getting replies. No? So if that is the small balance, then there's no problem even though we don't receive the reply also. So that is the case. A low error rate is expected. Now by practice, let's say by practice with the past history, you know actually these debtors are replying to these debtor confirmations, and only they will reply, only they will not reply if they really agree with the balance, not because they are not concerned or not because they are lazy, not because they have not received it. Now in other countries this might be the case, I don't know, but this might be the case. They are actually refrain from sending the reply because they are really agreeing with the balances. So low error rate is expected. No reason to believe the respondent will ignore the request. So practice, these debtors are very good. They are replying. So you can use these negative confirmations. So these are the situations where you can use these negative confirmations. But in Sri Lanka, we are not using these negative confirmations much. But most of the time with all these things, we are using positive confirmation. From positive confirmation, this first option, we are mentioning the balance and asking them to reply. That is the easiest way to get their reply. Okay, moving on. Now we are discussing about data analytics. Data analytics. When it comes to data analytics, this is a very trendy, this is a very evolving subject. Now you also learn data analytics, right? Now you can use this data analytics for these audit purposes as well, especially with regards to revenue and trade receivables. Now when it comes to revenue, imagine a large organization. When it comes to large organizations, there are so many transactions, right? Now when there are so many transactions, manual, or most of the organizations, most of the audit firms are using Excels. Using these functions in Excel and manual is very difficult. That is where you can use these data analytics techniques for these audit procedures to evaluate all these things. So what are the instances? You can identify possible fictitious revenue by searching for unusual or large entries in revenue accounts. Using data analytics, now even in Excel, using data analytics, you can directly give a command. Okay, pick me all these transactions which have a value larger than 1 million. Larger than 1 million means unusual transactions. So you can easily get these data analytics into audit procedures and find out the fictitious revenue transactions. Easily you can do them. And identify possible fictitious revenue by searching for entries into revenue accounts from unusual sources. Using data analytics, you can search for unusual sources as well. Identify possible revenue cutoff errors by examining unusual revenue transactions around year end. So you filter all these year end revenue transactions and easily you can do these data analytics procedures. Identify data transactions in the sales journal by selecting unusual transactions throughout the entire year. Identify possible duplicate billings. Of course, you can easily capture duplicates using data analytics. So there can be duplicate invoices. We don't know if there is duplicate. They can be overestimation of revenue, overestimation of trade receivables. So you call for duplicates as well. Identify possible unauthorized sales discounts by comparing discounts to individual customers in total and as a percentage of total sales. So you can do all these ratios and everything using data analytics. Analytics using all these procedures. Identify possible uncollectible accounts. Identify misstatements of accounts receivable by large credits. All these things, to check all these things, you can use data analytics. So there can be very small to very advanced data analytical procedures you can use. Okay, remember that as well. These are few instances. Now, steps for revenue recognition. Now, this revenue recognition is very tricky. Now, revenue and trade receivables are becoming very risky and prone to frauds because of this revenue recognition. Not only in goods manufacturing like trading organizations, especially with regards to construction and other complex organizations, revenue recognition is very important. Because of this risk in revenue recognition point, there are frauds and errors can happen. That's why revenue caption is very risky. So you need to understand the revenue recognition as well. When you audit revenue, first of all, you need to have a good understanding about SLFRS 15 as well. Because as per the accounting standards, everything should happen. Revenue should be recognized as per SLFRS 15. So that's why you need to have this understanding, revenue recognition. Now here, step 1. First of all, identify the contract. And then identify the performance obligation. Very important. You need to understand the performance obligations mentioned in the contract. And determine the transaction price. You have to, now if there are components, you have to identify the transaction price separately. And then allocate the transaction price to performance obligations. If there are 3 performance obligations, you have to identify the transaction prices separately. Recognize revenue when, what is the point? When the performance obligations are satisfied. And can you remember, there were misstatements where performance obligations have not met. They are not satisfied, but the company has recognized the revenue. There can be situations like that. So this recognized revenue when performance obligations are satisfied. Be careful when you actually do an audit as well. Most of you are in audit firms. So when you do audits, not the recognition point the customer mentions you. It should be agreed with the SLFRS 15 as well. As per the accounting standard, the performance obligations should be satisfied. So this is important. In order to do a systems, after doing a system study, you're going to realize each and everything. You are going to understand, okay, this is the point we are going to realize. Now, in a normal trading organization, when the goods are dispatched, the performance obligation is satisfied. That might be the case. So after dispatching, when at the point of dispatching the goods, you have to recognize the sales, not when the customer ordered the goods. Okay, that is why the revenue recognition point is very important. Most importantly, there can be cut-off issues if you don't really understand this revenue recognition point. What are the potential revenue recognition problems you can have? Sales with unusual right to return. If you don't recognize the performance obligation, there can be returns, unusual rights to return. Then at this point, definitely you will have to carefully check what is the actual performance obligation satisfied point. What is the actual point where we need to recognize revenue? If there are unusual right to return, there can be sales like that. Bill and hold transaction. Some transactions have been billed but hold. So in those transactions, you need to get the point, right point. Multiple element agreements. There are multiple elements. Now maintenance is there, selling the goods is there, again another component is there. So components are there, different obligations are there. So you need to check it carefully. So those are the potential revenue recognition problems. Okay, now before you go to this one, the time is 8:20 now. We'll have a 15 minutes break. Come after 15 minutes, we'll start with evaluating revenue estimates. Okay. If a considerable number is there after 10 minutes, I'll be starting the lecture because we need to finish everything. I need to go through all these supplementary documents as well. So please try to come early, then we can start the lecture early. Okay. Okay. Sulamai, I have noticed there are few students who don't have the CPM numbers with their names. So your attendance will not be captured if you don't mention your CPM number. Please mention the CPM number and your first name. Okay, as Ajit always mentions. Do that immediately. If not, your attendance will not be captured. Okay. So share the screen. Yes. So we get started. It's 12 minutes past anyway, and the considerable number of students are there with me. Okay, now quickly we'll finish it off. Evaluating revenue estimates. Now, when it comes to estimates, that means the impairment for trade receivables, allowance for doubtful debts. Now, how are you going to audit this allowance for doubtful debts? Revenue recognition may involve these significant accounting estimates. Yes, significant accounting estimates. Auditors can evaluate these estimates by what? What is the first one? You can review and test the management's method of developing the estimate. Now, if you take ECL, expected credit loss computation, you can review and test what is the method management is using, whether it is appropriate or not. Next one, develop their own estimate, that is re-performance, or you can take it as recomputation as well. So you are taking, as the auditor, you are computing it again. Basically not take ECL, but think about allowance for doubtful debts computation, a simple one. So auditor is computing this and reviewing subsequent transactions and other events that provide evidence about the accuracy of the estimates. Okay, so those are the things, those are the audit procedures we can use to evaluate the estimates. Now, audit of allowance for doubtful debts. Now, this is the detailed audit procedures. Review collections in subsequent periods. Now, after computing allowance for doubtful debts, you check whether subsequently these debtors have paid cash. There's a problem, no? So you review subsequent settlements and develop estimates and evaluate reasonableness of management estimate. You compute it all, like auditor is computing the estimate by himself, and then you are comparing with the client's computation. Compare the details on the aging of accounts receivable to prior year agings. You are comparing to aging statements of previous years as well, whether this year aging has been increased or not, whether we need to put more allowance for doubtful debts or not, whether we need to provide more this year, provide less this year. Likewise, you are comparing the aging statements. Investigate the credit rating for delinquent and unusually large accounts. So if you have given credits, if you have just allowed credit for unusual large amounts, sometimes there's a possibility that you won't realize those amounts in future. So if there are cases like that, you have mistakenly or fraudulently given for those large amounts, then you will have to provide for those things as well, after looking all the considerations. And so these are some example audit procedures for allowance for doubtful debts. So now we are moving to the question. Now, small example. Now previously I explained you how to read this aging analysis, aging of accounts receivable as at 31st August 2019. So you have the total receivable, the debtor balance here, and then the current amount, and after that 1 to 30 days late, 31 to 60 days late, and then 61, more than 61 days late. Okay, now you have the aging analysis provided as follows. Now, client's calculation on provision for bad and doubtful debts. Now, the client has computed the provision for bad and doubtful debts, that is $5,000. Now it is given. Now, auditor is independently calculating the provision for bad and doubtful debts. Independent calculation. So, the audit procedure is what? Calculation. Now, look here. You have current debtor balance, full value is 108,000. That is the total of this current. Now the current balance, there is no risk, no. Still we don't have a risk because that is the current figure. Most probably we will receive the balances. So the percentage of risk is 0. We don't have to put a provision. 0 provision. Okay. Now you are going to the next category, 1 to 30 days late, 1 month late, 1 to 30 days late. There you have a balance of 3,000. So your balance is 3,000. Still the balances are all for 0 to 30 days. So you are providing 10% of the balance as a provision for bad and doubtful debts. So you have a 10% chance of not receiving these balances. 10% of the total balance will not be received, most probably. Those are estimates. That's why those are estimates. We have to be careful. And the next one, 31 to 60 days. Now 31 to 60 days means almost 2 months. There 20% of the balance will not be received. You are estimating, the client has estimated 20% of the balances will not be received. So the auditor is applying the same percentages. After checking the accuracy, verifiability, using the same percentages. And then the next one, 3 months late, 61 plus days old, 18,000. 50% of this balance will not be received. So the estimation is 50% of this very old balance will not be received. So you will have to make a provision. So when you take all these balances together, the value is 9,679. So the auditor is computing the balances like this. But the client has computed the provision for bad and doubtful debts as 5,000. So in this case, we need to provide more. As per the auditor, it is 9,000, but the client figure is 5,000. So additional provision required for 4,000. So this is how simply we are computing, we are verifying this provision for bad debts, provision for bad and doubtful debts. Remember that. Okay, so I explained you earlier, related party transactions are also there. When it comes to when it is a group of companies, when there are subsidiary companies, we need to have related party transactions. So when you have those transactions, it can be a loan or it can be any other payment. There can be receivables. So those receivables have to be taken into consideration. Audit procedures need to be performed. So conflict of interest statements by the management, you need to use these things to verify that. Transactions with unusual terms, you need to check whether now the terms are given, whether transactions are having with unusual terms. You need to check that. In order to check the valuation, everything, you need to check this. Accounting records for unusual balances or transactions, particularly near the year end. Most of the time in practice, near the year end, there are so many things happening, right? All these adjustments, some frauds can be there. So you need to check year end unusual balances and transactions. And you need to ensure these receivables related to related party transactions should be appropriately disclosed. That is very important. All these related party transactions should be explained and disclosed, presented in the financial statements very clearly and separately. Okay. And then audit documentation. Now we are performing audit procedures for revenue and trade receivables. No, audit documentation is also important. Without audit documentation, you can't prove anything. No audit documentation means no audit. You have not done the audit. How can you prove that you have checked all these things, you have verified all these assertions if you do not document them, right? So that is why audit working papers are very important. So prepare working papers. Before preparing working papers, you need to prepare the lead schedules. Now lead schedules means you need to show the values first. Most of the time, this year balance and the last year balance and then the variance. So as an example, 2023 balance and then 2022 balance, variance. So you deduct 2022 balance from 2023 balance and get the variance, and sometimes variance as a percentage. So trade receivables and revenue also the same. Revenue lead schedule should be there. This lead schedule value, this year value should link to detailed breakups later. So in the next one, you will have a breakup. Breakup can be segment wise, breakup can be product wise, geographical breakups, different breakups can be there. Okay, so lead schedules, and then you need to document the aged trial balance. Now you did a few examples as well, and analysis of other accounts receivables. All the evidences should be mentioned. Analysis of allowance for uncollectible accounts. Now, if you have done this one, you need to show this in a working paper. With all these things, what is the procedure you performed, what are the objectives, what is the sample size. Likewise, after mentioning everything, you need to show this. And then comparative analysis. If you compare this year expense with last year expense, this year electricity with last year electricity, in this case this year revenue with last year revenue figures, you need to show each and everything in working papers. And when you do test of controls, you are testing all the internal controls. You need to document the results. What are the things you did? What are the process you followed? What are the test of controls you did? What are the controls you checked? Everything should be mentioned in the working papers. And of course, risk analysis and the audit plan. This is important. You are doing this in the preliminary stages. When you do the audit plan, when you do the risk analysis, everything should be mentioned. So this is not a new thing only for revenue and trade receivables. When you do the audit, you need to document as well. Same goes to revenue and trade receivables. Okay, now with that we have come to the almost end of today's lecture. But before that, we have a question. Now this question is not a big deal actually, because we have discussed everything. Give me a second. Okay, so yes, now we'll quickly read this question, and then the examples and the examples answers are there with all these examples, but we'll read the question first. So this is about the sales and trade receivables system of Salma PLC. You are the audit senior of Salma PLC, and one of your audit staff members had performed following audit procedures relating to the sales and trades accounts receivable balances for the financial statement audit relating to the period ended 31st December 2016. So basically, you are the audit senior. One of the audit staff members has performed all these audit procedures for revenue and trade receivables. First one, obtain a sample of customer orders and examine for proper credit authorization. Okay. Calculated the ratio between allowance for bad and doubtful debts with the accounts receivable balance and compared this ratio with prior years. This year ratio has been compared with previous year, and total the accounts receivable trial balance by adding the balances and compared this balance with the balances of the accounts receivable control account. You have computed total the balances and compared it with the control accounts. That is one audit procedure done. And then obtain a sample of shipping documents during the year and compare the date on them with duplicates of the corresponding sales invoices. You have taken that audit staff member has taken the shipping documents, and then you are comparing them with the sales invoices and the entries in the accounts receivables master file. Okay. Fifth one, discussed with the sales manager whether any unusual sales returns from related parties had occurred after the accounting period. So this is basically discussed with the sales manager inquiry, right? And then observed whether the accounts receivables executive prepares the accounts receivable aging, the aging statement we saw previously. and identifies long outstanding balances, very old balances, to calculate the allowance for bad and doubtful debts. So these are the audit procedures this audit staff member has performed. Now what is the problem? However, the engagement partner of Salman PLC is not satisfied regarding the procedures performed on certain large trade receivables balances and has requested you to obtain confirmations from them due to high risk of material misstatement. Now, as per the risk assessment, it seems that the risk of material misstatement is high and they have not called debtor confirmations as well. Now, the audit engagement partner is asking you to check this and obtain confirmations. Now, what are the questions? We'll quickly read the questions. Differentiate between the substantive procedures and the test of controls. Now, this question I discussed last week and also this week I explained you. First of all, I'll show you the answer. Now, when it comes to substantive procedures and test of controls, both are audit procedures. These are the two types of audit procedures. When it comes to test of controls, what do you do? Test of controls are doing to check the operating effectiveness of the internal controls, whether they prevent, detect and correct material misstatements. So an audit procedure designed to evaluate the operating effectiveness of controls. This is important. Operating effectiveness of controls in preventing, detecting and correcting material misstatements at the assertion level. So you need to remember this definition, test of control. And when it comes to substantive procedures, it is an audit procedure designed to detect material misstatements. So these are having two categories, test of details and substantive analytical procedures. Now, few minutes ago, I explained the difference between TODs and substantive analytical procedures as well. So I'm not going to explain again. Next one, the second question, identify for each audit procedure identified in the case 1 to 6. Now, for each audit procedure, they have done this, audit staff member has done 6 applicable type of audit evidence, and whether it is a test of control, whether it is an analytical procedure or test of details of balances or test of details of transactions. So you need to mention that. And then the applicable audit objective for each audit procedure. Part C, it says differentiate between positive and negative confirmation and indicate what kind of confirmation you should use to confirm the large accounts receivable balances of Salman PLC. So before moving on to part B, I'll explain you the part C answer. Now I told you there are two types of debtor confirmations, positive and negative. In positive confirmation, you expect a reply from the debtor. And in negative one, you don't expect a reply. You expect a reply only if there is a disagreement with the value you mentioned. Now here, what do you mean? What do you think? Now there are large trade receivable balances and there is a high risk of material misstatements as well. So from the positive and negative, straightforward answer, you can go ahead with what? Positive confirmations, because negative confirmations won't do much here because risk of material misstatement is also high. So you have positive one. Positive figures can be there. So here the answer is all after mentioning all these things. But what are the things? Now auditing standard indicates that it is acceptable to use negative confirmation in these situations. So in the slide I explained you what are the circumstances in which you can use negative confirmation. But as per this situation, when it comes to Salman PSA, positive confirmations should be used. That is the conclusion. Okay, now when you consider the part B1, you need to understand the applicable type of audit evidence, whether it is a test of control, analytical procedure or TOD, and the applicable audit procedure. Now look at here. First one, it says obtain a sample of customer orders and examine for proper credit authorization. So the audit procedure is you have checked the customer orders and you have checked whether our client has approved the credit limits. So what is that? What is the audit procedure? The first one is the audit procedure. That is inspection. You are checking customer orders means the inspection. Through inspection, what is the evidence you have collected? Documentation. So inspection is the audit procedure. And then what is this? Whether the client has performed this control, right? Checking and approving the credit limits, it is a control. So you have checked whether the control is there. What is that? Test of control or test of detailed or substantive analytical procedure. That is a test of control. You are testing whether the control is there. So test of control is the answer. And then by doing this audit procedure, you are covering audit assertions occurrence mainly. And then the second one, calculated the ratio between allowance for this year ratio, allowance for doubtful debts with the debtor balance, and you are comparing with the last year one. What is that? Comparing. You are comparing the ratio. You are doing ratio means that is analytical procedure. Substantive analytical procedure. I told you how to recognize those things a few minutes ago. And then you are checking accuracy and the completeness of debtors. Third one, total the accounts receivable trial balance, and you have compared with the control accounts. So what has happened? You are taking the totals and then you are checking it again with the control accounts. Basically, you are pre-performing. You are re-performing the procedure already performed by the client, your client. So re-performance is the audit procedure, and of course that is not a test of control and that is not a substantive analytical procedure. Of course that is a TOD, test of details. So likewise 4, 5 and 6 you can read and understand. It is the same as we discussed 1, 2, 3. So this is how basically you need to answer for this type of question. So you will be getting case studies, a similar case like this, and you will have to answer these questions. So with that, we have covered the whole process of how to audit revenue and trade receivable, revenue and accounts receivable. We're talking about test of controls, what are the substantive analytical procedures, what are the test of details, and hope you can remember A, B, C, D, and E. You identify the inherent risk, you identify the control risk, and then you analyze the risk of material misstatements and design the audit procedures. The next step is you are performing the audit procedures. First of all, you are performing test of controls and then you are going for further audit procedures. So this is how basically you do audit. Now, as I mentioned in the beginning as well, we have uploaded several other readings, right? Reading materials. Those include all the other processes, purchases and then inventory, property, plant and equipment. All these processes are there. Now you have the foundation. Now you have the understanding of how to read and understand all these controls, test of controls, what are the assertions and everything. So please make sure you read them and understand. Okay, so I'll stop sharing now and we have one more segment to continue. Yes, Ajwat sir.
Natasha.
Okay.
Okay, Natasha. Thank you. Thank you very much. And so, students, now we are going to have a very important session for you, which is from CMA. So, I request all of the students to stay and listen very carefully. And yes, so first, let me a little bit apologize for the representatives from CMA, Mr. Intikab, the CEO, as well as Mr. Sandeep, as well as Mr. Indika and other representatives. We are a little bit sorry to keep you waiting because we had suddenly, because there was a small issue in starting the lecture because of some technical issues. So we had to take about 10 minutes more. Very sorry about to keep you waiting for 10 minutes. So now let me have the honors to introduce as well as invite our CMA colleagues, representatives. So first of all, let me really welcome Mr. Intikab, Muhammad Intikab, who is the most new CEO at CMA. Uh, we will welcome Mr. Intikab. So we
Thank
hear
you
that
very much.
he's a very energetic as well as a very impactful person who has the knowledge of speaking, the ability of speaking 6 or 8 languages. So that's remarkable, and also
Thanks.
having have a very great impact in a humanistic way. And I hear that visionary that's really required. So it's compliments our good Professor Waterwell, who is indeed a visionary, the president of CMA. I would like to very much acknowledge Waterwell as well, Professor Waterwell, Lakshman Waterwell, and then invite and welcome Mr. Intikab, the CEO. Thank you very much for today coming and trying to enlighten our students. So that's Mr.
Thank you.
Intikab. Then thank you very much. And then
Yeah.
our own Sandeep. So our own Sandeep Jayasekara. So he's actually sometimes some years back, Mr. Sandeep Jayasekara, who is the son of Mr. Jayasekara, the owner, the proprietor of CMA, of the JMC, Jayasekara Management Center. So JMC now, Mr. Sandeep, one of our own graduates. He's the CEO of CEO of JMC, who is also here to speak to you on behalf of CMA as a representative. And if I want to speak about Sandeep, it will take one day because sometimes back he was sitting exactly like you as one of my students, and who was really a brilliant student right at that time. Now he's a graduate, a prominent graduate of and having several credentials, professional and other qualifications. So we are very happy to have Mr. Sandeep Jayasekar. So who always would extend his hands to help our Department of Accounting. Department of Accounting is one of our proud alumnus. So we are very happy to welcome him as well, who will be speaking. And then Mr. Indiga, who is a senior manager at CMA, who is very cordial and working with us. So why they are here? Actually, they are trying to help all the department as well as all of you. So students, stay and listen to them very carefully. They are going to give you some very important messages to you that will be very important for your life aspects, for your education and professional development, educational aspects, as well as to develop your life and have a better life in time to come. So then we have some other representatives from CMA as well. So let me again welcome Mr. Intikab, the CEO of CMA, as well as Mr. Sandeep Jayasekar, the CEO, the CEO of JMC, a prominent educational provider, which we all know, and then Mr. Indika, as well as other CMA representatives. Thank you very much for coming and sparing your important time to address our students. Really appreciate it. So the floor is yours. So I think I heard Mr. Indika told that first Mr. Sandeepa will be speaking, and likewise. So please feel free. Now the floor is yours. Now you can please continue.
Thank you, sir. Let me share my screen. Right. I don't know whether my screen is
We can
properly
see.
shared. Right.
Yes, we
Okay.
can see Buddha. Yes.
Right. Thank you very much, my dear sir, Ajwat sir. So in my life, this is one of the greatest opportunities because one of my role models is my dear sir, Prashant Ajwat sir. So thank you, sir, for the opportunity. So my dear students, today I'll be taking not more than like 15 minutes. I'll be taking a little bit of your time to share some thoughts on success, because as far as I know, you all are third years and you all have just started your internships. So the things that I'm going to share will be really important for you all in your professional success. So the theme that I wanted to share is about success formula, right? And from that, we will be having a discussion on CMA part as well. And in that case, Mr. Intikab will also help me, right? So let me, ask a question. If someone can answer, that will be really a great help. What do you think about success? Is it a magic, something that can happen overnight, or is it a process, right? Can someone, you can actually send a message. Success, is it a process or is it something happens overnight? What do you think? Right? I believe we have interactions in the online classes, right? So if it is a physical class, I know definitely we can get the responses easily. Can someone respond? Yes. Right. I don't know whether I'm getting the messages, but anyway, right? So when it comes to success, some things it's something that happens overnight, but really speaking, success is a process, right? It's a process that we need to understand. So if in your life, if you want to become successful, we need to understand that we need to follow a process, right? So what I'm going to share is this is based on my own research that I have done. And based on that, I'll share certain thoughts on if you want to become successful in your life, what are the things that you need to focus, right? Now, let me just share a few advertisements. I know these are relevant to our accountancy profession. So we as accountants, we as accountancy graduates, now we are in the third year, we have just started our training and internships, and we are planning to become, professionals in the accountancy or maybe the finance, maybe the taxation, maybe in the audit field, maybe in the compliance sector. And now there are a lot of other things which are coming like operational finance and IT and finance. There are a lot of aspects booming, and you want to become a prominent professional in those areas. So what we need to know is, first of all, we need to understand what is the requirement of the market. So I'll just share few of the advertisement I just downloaded from Top Jobs. So before this session, I actually browsed, and these were taken from the Top Jobs today itself. So if you look at in order to be an accountant, so the required qualifications include, this is basically a BOE approved company, and they're looking at the chartered or ACC or CIMA CMA, and they're looking at your 3 to 4 years of experience, and they're looking at your computerized accounting and ERP systems knowledge, and working knowledge in QuickBooks system is a must. They clearly mention it as, and capability of working in Microsoft Office, Word, and PowerPoint, and good communication skills in English and Sinhala. So like that, the list goes on. Right, let me share another one. This is also relevant to that same area. Right, they are also asking for the professional qualification on ACCA, Chartered, CIMA, CMA, and the degree in an accountancy, the experience in number of years. Once again, they're asking for the QuickBooks experience will be a definite advantage. In depth of understanding on accounting principles, taxation, statutory requirements, excellent analytical skills and communication skills, and they're asking you to become a team player as well, right? And they're asking about the investment and project appraisal, negotiations, this and that, right? So like that, I am not asking you to limit yourself on to these several uh, job advertisement which I have displayed. You can always go to Top Jobs. You can always go to, you can buy the Sunday Observer, and you can look at the profiles of the directors of blue chip companies or the listed companies and see, right? What is the profile? What is the things they have done to reach that position, right? So based on my research, right, what I have done is, I have created something. Now that I'm I'm putting that to something like this. So, for an example, let's say think about yourself in one side of the river bank. So yourself in one side of the river bank, and you want to go to the other side, right? So this is where you are right now, right? In your life, you as accountancy third year graduates, you are in a one one particular bank of this river, and your destination and your dream, that your whatever the dreams that you want to aspire and where you want to be is the other side of the river. So then these two sides are connected through a bridge. Now, bridge is our strategy. Bridge is our strategy. So using this metaphor, right, we are going to build up a simple formula for success, right? Now, we know that when it comes to a process, there are three things. One is the input, other one is your process, and the output. So let me put these three into three different terms. As if you want to become successful, you have to input yourself. So you can't be putting anybody else. If you want to become successful, you have to input yourself, right? Then there are things that you need to do, the process that you need to follow. That is our bridge. That is what we call the strategies that we need to follow. And finally, right, the dream that you need to aspire, right, dream that you are going to achieve, right? So in that context, right, in that context, what I wanted to share is when it comes to your dream, right, it can be a particular job or it can be a business that you want to do, right? So I believe some of you might be doing a job in the future, right? And some of you might become entrepreneurs, and some of you might do both of them together. So there's a job and there's a business as well. So this is something that I prefer, right? So you need to have a job as well as you need to have a business as well, right? So don't rely yourself on one income source. You need to have at least 5 income sources: a salary, a profit, a royalty income, investment income, and the capital gains. Like that, you need to have like different sources of income to you, right? So now your dream, it can be a job, it can be a business, or both. Now, in this context, you need to understand your dream job should be something you like. Otherwise, it won't work, right? So whatever the things you are going to do in your future should be something you really like, something you're passionate about, right? Something you're passionate about. If you are passionate about something, then you are going to do that job perfectly as possible. Every time you are going to do the improvements in yourself. So please do whatever the things you are going to do, something you're passionate about, right? And at the same time, the second thing, the first one is the like or the passion. Second thing is whatever the things you're going to do, you should be able to do that. You should be having those skills required. Otherwise, you won't be able to sustain. You won't be able to survive, right? So first thing, you need to be passionate about it. You need to have that passion. Second thing, you need to have the skill set, right? Otherwise, you won't be able to survive, right? And the third important thing is it should create a value, right? So whatever the things you are going to do as a job or a business, it should create a value, right? Value to you in terms of maybe money or any other tangible things. And maybe you need to have some mentally or the spiritual values as well. And at the same time, you should do something back to your country as well. So value is a very, very broad category here, right? So what I want you to understand is you need to understand your passion, right? And sometimes once you understand your passion, you need to develop the skills required. Or sometimes you need to understand your skills and develop the passion about it. So this is very, 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 very important, right? So I'm telling about little three things. I hope you can easily remember. Whatever the things you are going to do, you should be passionate about it. And you need to have the skills, the ability to do that. And you should be generating value, right? Now, in order to reach that, right, that output, we need to understand what is your input. The input is yourself. It starts with knowing yourself. Most of the time, we make the mistake here. Most of the time, we don't read ourselves. Most of the time, we don't understand our strengths, our weaknesses. We used to do SWOT analysis for all the other companies, and we used to give character certificates for all our friends and everyone. But how many times we have looked into ourselves and understand what is my passion? What is the thing that I really like to do? And what are my skills? What are my skills? For what I'm getting appreciated? What are the things I really want to do? What are the things I really like? And what are the things people are appreciating me about? right? What are the things I'm really good at, right? And what are the things that I can generate a value?
Mr.
Sa
Sandeep, you got
Sandeep, we can't hear
muted.
you. Yeah, you got
Yeah, you got
muted.
muted.
My bad.
Okay,
Is it
now
okay
fine.
now? Right.
Now
Sorry.
fine.
Sorry. Right. So you need to understand your passion and make it your future job, make it your future business into whatever the things you're passionate about. At the same time, understand your skill set and make use of those skills in your future job and your future business. At the same time, understand your value system. What are the things that you can generate value to yourself and to your country as well, right? And make it into your future job, right? So this is the success formula, the input and output which I propose. And for us to reach these milestones, there are certain things, the strategies we need to follow, right? So the first and the most important thing, I would say, attitudes, right? I would say 100% the most important thing is attitudes, right? Now I think the current trend is hire the attitude then train the aptitude. Hire the attitude, train the aptitude. Even I follow that in my own organization where I have 600 odd employees. Whoever is hiring in my company, I do the final interview and I'm not checking the certificates or whatever. I check the attitudes because I believe if you're a good person, then other things we can do something about it, right? The first and the most important thing is attitudes. We need good people. We need good people to our country, to our nation. We need good people. So please, my dear students, you need to have good attitudes, right? You need to have the integrity, right? And you need to work with your consciousness, right? At the same time, right? You need to help others. You need to respect others. So most of the time we don't see that respecting the others. If you want to get respect, you need to pay respect. You need to give respect, right? Respecting others, helping others, having this empathy about the others, right? These are really important attitudes. And the most important attitude is attitude of gratitude, right? You need to have the gratitude, right? Gratitude is the most important attitude. So please, everyone here, right? You need to develop your attitudes, right? Attitudes. Attitudes will show whatever the things in your soul, right? So the most important thing is you need to develop good set of attitudes. Secondly, right, if you want to survive in your job or the business, you should be a skilled person. Let's say you are having all these qualifications, other things, you have the academic qualification, professional, and all the other things. But if you haven't improved your skill set, then you won't be able to survive. So you need to have the analytical skills. I was just listening to your lecture on auditing, and you'll have Natasha, Madam did a wonderful lecture. I was listening, and they have a lot of things. As an auditor, we are into a lot of deep analytics, right? So you need to have these analytical skills. You need to have the presentation skills. When you are given a chance, let's say you are becoming a director, if you have been asked to do a presentation, you can't be asking somebody, whoever is junior, to do that presentation, right? So you need to do that. So you need to have that presentation skills, right? And you need to have the interpersonal skills because we are going to work as a team, right? In the corporate world, in the business world, it's not a job by a sole person. It's a teamwork. It's always teamwork. So for you to do that, you need to have better interpersonal skills. So these interpersonal skills and analytical skills, presentation skills, those are really important. Presentation skills, analytical skills, interpersonal skills, right? So those are really important. Okay. And at the same time, right, now we need to understand, right, we are working in IT systems, right? So in the previous advertisement I showed you, they're asking for the ERP knowledge. I know our degree program, right, there's a separate course models on the ERP systems, right? So you need to have this hands-on experience on these ERP systems. Plus you observe that they're asking for the MS Office. So those days we had this financial modeling subject. I believe still that subject is there, which is fantastic subject. You are going to learn the Excel and other these very important tools, right? So these IT literacy, and I hope you observed that QuickBooks. QuickBooks is the largest, when it comes to Sri Lankan context, the most used accounting package is QuickBooks. So you need to have this hands-on experience and idea about these IT systems, right? Always remember, if you have a qualification, if you have a experience or qualification on ERP systems and these accounting packages, your profile value will definitely increase, right? And third and fourthly, it's about the fluency, right? We are coming from Sinhala background, most of our students, right? We have been learning in Sinhala in our school and universities, even some people do in the first year Sinhala language. But really speaking, when it comes to the corporate world and the business world, what we need is the English fluency. So you should be able to speak up. English in Sri Lankan context is not a language, it's a qualification, right? It's a qualification, and English is something that will boost your personality and you can use it to market yourself. Most of our accountants are facing this situation, right? We are not that fluent in English, so we do all this backstage work, but the credit goes to somebody else. So please don't do that. So during these years, you need to improve your fluency, right? That's very, very important. And the academic qualification. Right now, you all are doing your degree, right? Your first degree. So you all are undergraduates in the third year. At the same time, you need to plan your further academic qualifications. So you need to plan out when are you going to have your MBA. Just after getting the degree, I'm not recommending you to get the MBA. Please have some corporate experience for 1 to 2 years at least. So after maybe like 26 or 27, you can focus on the MBA. So MBA will transform yourself from an executive to a manager. So that's the whole idea of an MBA, right? So think about your MBAs, think about your PhDs. So those are the academic part we require in our future jobs. At the same time, you need to have the professional qualification that depending on the future job or the business you are going to do, right? You need to understand what are the professional qualifications required, and then you need to achieve those professional, and you need to get those professional qualifications, right? So depending on, right now we are in the accountancy field, right? So there are professional qualifications. I will explain in the future as well, so that you need to obtain, right? And most important thing, your experience. You'll have just started your internships and trainings. That's very important, very important. That is where you practically engage. We are practically experience this attitude, soft skills, IT, everything together. So you really into that. So get the maximum benefit out of it and engage yourself actively in this training and internships and gradually improve yourself, right? So this experience, thereafter you will move on to the executive layers, and thereafter you will go on to the managerial level and the directorial level. Like that, it will improve, right? So I would say, if you want to become successful, these 7 factors are highly, highly important. And accordingly, you need to develop small targets, right? So in terms of attitude development or the soft skill or whatever the qualification, have small targets, right? Within the next year, you are going to achieve these things. In these 7 factors, what are the things you're going to do, right? So have some small targets, because we need to have a bigger picture, yes, and we need to reach that with the small targets. And like I said, we need to have a holistic approach. I know some of you are thinking of first to improve the English, right? First to works on English, thereafter go to IT, thereafter go to maybe the professional qualifications. We can't do like that, right? So we have to do things parallelly, right? Because if you want to become successful, you need to become a qualified, skilled person within the young age as possible, right? As young as possible. Right now, we need young qualified people, right? So we don't have that much of time. And my dear students, right, we have to do this with a utter dedication. So we have to dedicate yourself. You have to dedicate yourself. And I know it's not easy task. It's difficult. And not only you, myself, Ajit sir, and almost all the professionals, we have passed these hardships, but it's always worth. It's always worth, right? Always, it's worth to, you know, experience all these things because, right? If you want to become successful, you need to do these things. Now, let me show you when it comes to myself, what I have done, right? So when it comes to these 7 strategies, right, at my age of 21, 22, 23, 24, like that, what I have done, right? At the age of 21, actually, I was developing certain amount of attitudes. I was improving my skills on creativity. I wanted to become a creative person. I did improve myself on Microsoft Office, English writing part, grammar. I was not that fluent when I was aged 21, and we were starting the university as well. And by the time I was at the final levels of chartered, right? And before A levels, I have experienced like 1 year working experience. So that was there for me as an experience. Then in the second year, right, I was improving the positivity. I wanted to see the positive things. I was always keeping a positive vibe among me, right? And my vocabulary I improved, and I started the management accountancy qualifications as well, and I was in the university as well, right? Then by the age of 23, I was also a little matured, and I was improving myself on empathy, understanding the feelings of the others, right? Put myself into the others' perspectives and try to understand what is their state and try to help them, developing the interpersonal skills with the group activities, right? And we did computerized accounting at our accountancy course program, right? And I have completed my qualifications in terms of professional qualifications, and we have started our internships as well, right? Then finally, by the age of 23, in terms of attitudes, I was able to become kind of professionalism among me, and I was developing my analytical skills, right? And I started speaking in English much better. I improved day by day, and I have completed my CA and other professional qualifications. And by the time I have become an audit supervisor to audit manager, right? And finally, by the age of 25, right, I was able to, improve my skills, IT abilities, fluency. I completed my degree, right, and I was completed in AAT, CIMA, Chartered, and CMA, and I was assistant manager and became a CEO as well, right? So basically, for me to become a CEO, I had to do a lot of things, right? So I have to do all these things together. So my simple message to you is, right? So you are in third year, you'll have started your internships, you'll are working on that. So please focus on what are the areas you are weak, what are the areas you're having lapses, right? In terms of attitudes, maybe soft skills, maybe improve. Every day you need to improve. Every year you need to improve. Every year you need to become better version of you, right? That is how we can become successful, right? And success is definitely a journey. So we need to enjoy the journey. It's not a destination. Right? Success is not a destination. If it is a destination, it'll end, no? Right? Success is a journey. So once I became a CEO, I was planning on what else I need to do, what else, right? And every day I'm learning. Even today, though I have this lecture, soon after this lecture, I have to join another class because I'm learning, right? I'm doing an online course, and I want to improve myself. So it will go up to 11:30, right? Still, it's not over. Every day we have to improve, right? So this is basically my profile as of now. I'm a CEO and I'm a partner. I'm a founder of a separate venture. I'm a lecturer. I have done this and that in terms of chartered accountancy, CMA, CIMA, like that. And so I'm still on this journey and it never ends, right? So my dear brothers and sisters, I think I can say brothers and sisters yet, right? So please, I want every one of you to become successful in your life. Success may not be something tangible. for some people it's tangible, but I would say success is something that you need to have inside you, that you need to have that feel, right? So I would say success is simply about your happiness. If you're happy, you are successful, right? So please, you have to continue this journey, right? And each and every time you need to improve yourself, right? Finally, I'm representing CMA here, right? So CMA is the Certified Management Accountants of Sri Lanka, which is the national body for the management accountants of Sri Lanka, enacted by a parliamentary act, which is coming under the finance ministry, right? And CMA is a recognized qualifications for uh, in the private sector, public sector, in the foreign countries, because we are an IFAC member. We are accepted by 130 countries. At the same time, banking sector, yeah, highly recognized qualification, CMA, right? So when it comes to CMA, the foundation level, the operation level, the managerial level, all these are exempted to you all, right? So you are a University of Sri Jayavardhan, you have already completed your second years now. You are in the third year. So you can straight away go to the strategic level, right? So you can straight away do the strategic level and the case study. So you are done with CMA, right? Especially if somebody wants to become a management accountant, somebody wants to become a CEO, definitely you need to have the management accounting qualifications as well. And not only that, you have been given an offer, right? So if you are going to get this, apply for the exemption, right? So 50% of the exemption fee is also waived off. So that's a real benefit, right? 76,000 is cut down to 38,000. So 30th July 2023 is the last day to apply for the exemption. So other than that, you need to pay the registration fee, and Mr. Indika will be there to help you. So please, I know you all are doing other professional qualifications. Do continue. Do continue. Don't give up. At the same time, you might be stuck in the middle of because of a training issue for like 1 year or 1.5 years. You might be stuck. So don't waste that time. So in the meantime, you can do a management accounting qualification, which actually I did. I completed my other professional qualifications in the first year. So I can do the remaining levels in the last year. In between, I completed a management accounting qualification, right? So that is where you can't be wasting your time. Every day you need to improve with your targets. So you need to do the strategic level. There are like 4 subjects, and there's a case study. All these are physical examinations are there. And after a workshop and a speechcraft program, right, you can get the membership, which is accepted by IFAC and Confederation of Asia Pacific Accountant and South Asia Federation of Accountants, right? And you can go to different odd jobs, right? Like I told you. And at the same time, right? So once you are a CMA member, there are a lot of exemptions. Before ACC, you are definitely getting for the accountancy degree, and for the MBAs, even you are getting the eligibility as well, right? So this is basically what I wanted to share. Sorry if I have taken a little bit of more time. Apologies on that, right? But I believe what I have shared will make at least a little impact, at least for one person, right? That is my sincere hope. So thank you everyone for listening to me and supporting me to share certain thoughts. And I'm always privileged and love to share things with you all. And definitely in the presence of Ajit sir, when I'm doing, I'm so privileged. So I'm like over the moon now, right? So thank you, everyone. So let me hand the session back to our dear Ajit sir.
Thank you very much, Sandeep, for very much encouraging. You were one of our very best students, who was the best of at your time, who won the gold medal, and also very impressive. And actually, now the subject matter that today we are discussing is auditing. So in auditing, actually today, Miss Natasha, what she covered was about audit evidence. So Sandeep, now when we want to talk about things, tell about things, we can tell different things, but we need evidence. So now we have to living evidence. You talked about success and you talked about a lot of things. That's very, very impactful. And also you provided evidence as we did in auditing, as we do in auditing. That's you. Your life story itself provides that evidence that with determination and with the formula that you have told. It's a very important for this. I think the 20-30 minutes that you have shared with us and you have enlightened the students will really set the the stage for success for all these students. If they follow what you have told, I think it will really have a great impact. So we'll make this video available as well as a part of the lecture as well. So it's so interesting and so important. Thank you very much, Sandeepa, for helping always the Department of Accounting. That's what we have seen in you. And you never say no. All the time you voluntarily come without, you are a very busy person being a CEO and having a lot of other responsibilities and also being a father recently. We know how busy you are. But again, we can see that with all these responsibilities, you are helping us to set with the society and we see that what you have done. And also you remarked about CMA. I'm also an CMA, a fellow member of the CMA, so which is the Management Accounting Qualification of Sri Lanka, the National Management Accounting Qualification. So there's no other body representing the management accounting profession in Sri Lanka locally. So I think the best person to discuss about it is Mr. Intika. So, Sandeepa, thank you very much again. And now we would like to welcome and cordially invite Mr. Mohammed Intikab. So, Assalamu alaikum,
Walaikum
Mr.
salam.
Intikab. So,
Walaikum salam.
we are very happy to have you here. And yes,
Yeah, sure.
Mr. Intikab, now
Yeah,
it's your turn, please.
thank you. Thank you very much, Dr. Ajwad. It is actually a great pleasure to talk to our future generation who will be taking over this and building this country and taking this country to new heights. So our main objective, being a national body, is to actually develop the intellectuals of this particular country so that we have sustainable growth and we have sustainable leaders who can take over things and think a little differently. So that is the most important thing. So our qualification, if you talk about our curriculum, Sandeep touched base upon in the strategy part that you need to have different skills, you need to have different attitudes, soft skills. So if you look at the curriculum that we have developed, we have inbuilt all those important elements. So we have 7 skills modules where we cover data analytics. We also cover computer-based accounting package. We cover Sage, and also we have this speechcraft program where you improve your communication and presentation skills, because we understood at a very early stage it is very important not only to have the knowledge but also to have the right skills that will help you to excel in your career. And the CMA, we are not targeting to produce accountants. We want to produce CWOs, CEOs, entrepreneurs, business strategists, right? I myself, I've never worked in a single day in a finance department as such. I've been a global consultant, I've been a strategist, I've been a business process expert. One of the projects that we did was part of the Saudi Aramco, where I was one of the 88 financial specialists in the world representing 7 countries, not Sri Lanka, but I was representing actually Saudi. So I was one of the 88 privileged financial professionals because I specialize in oil and gas. And Saudi Aramco is the 3rd largest company in the world in terms of market capitalization. They are about $2.27 trillion, right? So if you talk about our economy, they are like 30, 40 times more than our economy. So what we did was, one of our specialty was to bring the consolidation of all their companies, over 300 plus companies globally, within 17 days. Early, it was fully owned by the government. They wanted to float 5% for $100 billion, and I was actually a director at EY, who was a financial advisor at that time. So our main task was, I was leading the accelerated close process, where we had to bring down their consolidating all their
say Nikha, but I think you got muted. Excuse me. You too.
Ah.
Okay. Can hear. Can hear. Can hear.
So what I'm saying is, being a finance guy, you can be a process expert also. So we brought down the consolidation of all the accounts from 163 days to merely 17 days. Because if you don't have those, you cannot list in any of these leading stock exchanges. So they were looking at listing themselves at New York Stock Exchange. They were looking at London Stock Exchange. Then they were looking at Tadawul, their own stock exchange in Saudi. So then they decided they want to list it at Tadawul, but we benchmark them with BP, British Petroleum, Exxon, Shell, you name all the top leading oil and gas companies. We did that. What I'm saying in my point is, since you're a finance person, you've been exposed to so many other areas, management areas, as Sandeep said, financial management. So you can be a wealth manager, you can be a wealth advisor for high net worth individuals. You can be an investment manager. So what I'm saying is your spectrum is very high. And what we do is at an academic level in the universities and at a professional qualification at our institute is develop your skills. So it is up to you all as individuals how to sell those skills. As Sandeep says, as long as you can show the skills that you have and the competencies that you have can add value, price is not a problem. If you sell your skills to the right organization, and if you can demonstrate the value that you're going to create, there are people who will write a huge check for you. So what I'm saying is you build the right skills academically and professionally. Can somebody tell me what's the difference between academic and professional qualification? What's the main difference? Can somebody tell me why are we always harping that it's good to have both, and also not only one area, it's good to have consolidation in many areas. Now I specialize in about 4 areas. Can somebody tell me why are we telling that it's important for you all to know that? Because now the demand that we have in the market is for not specialists but generalists. Plug and play. You should be able to know more than one functional area. If you are specialized in one functional area, there's a very good chance you can be a global consultant, or you can be in a good advisory role for companies as well as governments, right? So what we're saying is don't limit yourself only to one functional area. Try to specialize in finance and IT, finance and marketing, finance, marketing and IT, finance, marketing and even law. There are so many good potential, as Sandeep said, you have to keep on exploring and you have to consolidating. But when you're consolidating your qualification, you need to understand that you need to be a fully fledged professional. The difference between an academic and a professional, an academic has the knowledge, but a professional has to have the knowledge plus has to demonstrate how to use that knowledge. And then a professional body will certify saying that he is a competent person in that particular chosen field. So that's the main difference. It's like, let's say you want to drive. If you go to a driving class or driving school, it's like you're getting the knowledge how to drive. But even if you go 5 years into a driving school, if you don't have that driving license, legally you cannot drive, right? Legally you cannot drive. So going to a driving school and then after that getting the license is like the difference between being an academic and a professional. So going to driving school to learn how to drive is an academic qualification. Once you learn how to drive, once you can do the relevant exams and then you pass and you obtain the license, then that is a professional qualification. So that's the difference, because academic do not require you to have the relevant experience, and they will not stamp you to say you're competent enough to be that particular profession. So at CMA, what we do is we make professionals and we want business leaders. The management accounting is very much demanded in overseas, because I have been working overseas for almost 17 years, and I have worked in many countries like US, UK, Middle East, the Far East. I'm telling you, management accounting is a tool that you can use in many functional areas, and you can specialize. It depends on you, as Sandeep says, it depends on the way you want to develop the skill. So at this level, what we do is we give you some seeds and we take you in certain areas for a very, very deep understanding. So it is up to you to demonstrate the value that you can create with those understanding and the skills, with your experience, of course. And then if you can create value, you can have your own clients, or you can work for a company who has clients where you can demonstrate and deliver value. That's the most important thing. So I think sky is the limit. I will not take too much of time. I'm telling you, we are just upskilling you, and it is up to you how you want to use that skill and where to sell that skill. We of course help you all through our job bank to find the right placement of jobs. We have a lot of members working in Asia Pacific, such as Australia. We have people working in the UK, US, in the Middle East. There are so many students working in the Middle East now because that is where the liquidity and the major projects are happening. I don't know whether you all are aware. There's a project called NEOM project in Saudi where they are trying to develop cities with artificial intelligence and high-tech cities, and the investment we are talking about $500 billion, right? $500 billion investment. So they need professionals. So they need multifaceted professionals who can think and who are open to learn and who can upskill themselves, right? So I will not take further ado because I think if you have any questions about upskilling yourself and getting the professional qualification, you all can get in touch with us, right? And we will guide you and we will assist you and we will also place you in certain industries where you can get the right exposure. And then we hope that we can be in touch. And I wish you all the best. And please feel free to get in touch with us so that we can help you in your career. And if you want to start something on your own, even starting up on your own, we can guide you and we will guide you for the investors. We can guide you for getting the right markets, accessing accessing data, accessing people. So that's the strength that we have, the network that we build. So two things will define you. One thing is your effective communication skills, very important. You should be understood. Number two, you have to build the right relationships. See, I'm talking to you today at 9:30, from 9:31 to now, because of the relationship that our friend Indika had with Dr. Roshan Ajwat. And even Sandeep came, right, fully dressed. I'm of course not dressed properly, wearing a tie, wearing a proper attire, and he waited very patiently from 8:25 to deliver. Why? Because of the passion and the relationship that we have. So similarly, Dr. Ajwad, I'm more than happy to come and speak to your students at any time, and we would like to do something for them also, like developing some soft skills for them, like developing their ability to face interviews, their ability to be confident, build confidence, build a positive mindset, their leadership skills that they need, their presentation skills, their communication skills. So we would like to come and we will also voluntarily do. I told Sandeep also, this is something that we want to give back to our society. So we can do maybe a 2-3 hour session. We can partner and do absolutely free of charge for you all. You all just have to give us the resources and you all have to just give us the time. We will come and upskill our generation, because if we do that, I hope in time to come, the people who are now listening will do the same. So if you can train 10 people from your end, like how Dr. Ajwat has, I think, trained thousands of students. I think if you have lectured for 20 years, 300 in a batch, he has done a tremendous job. That's really commendable. So that is what we have to do. We have to share the good things that we can do with others. And if you continue to do that, the dream that we have is to build a strong, sustainable, intellectual, human capital in Sri Lanka. We are very small, but we are very, very smart. I know that. I have worked with so many different nationalities. Our generation, our kids are very smart. It's just that they need the right hand holding and they need the right placements. That is what we need. If they can sell their skills at the right place, sky's the limit. There are so many people in the boards of Google. There are one person who even formed Facebook is one of our own, but he is a Canadian, Chamat Pilapite, right? Chamat has a background of Sri Lanka. What I'm saying is our students are very, very smart people, but they need the right context, the right relationship, the right people to get connected. If that is the case, they will also be able to do some projects that we are also being exposed to do. By the grace of Almighty, we are also being exposed to do some, I mean, even going and reviewing and recommending the costing methodology of the Kuwait National Petroleum Corporation. That is the national refinery. And I did that project with one of the UK buddies of mine. Right? So what I'm saying is the exposure that you get is immense. The skill that you learn, the attitudes that you have, if you can show value, there will be a lot of opportunities in this world. So I once again thank you everyone for being patient and listening to us, and also Dr. Achwat for giving this opportunity. And thank you very much. And we hope to do some exciting projects with you all in upskilling your students at any time. Okay, just give us a call and tell us a date. We will also reserve and we will put up a nice program for you all and upskilling your soft skills. Thank you very much. Assalamu alaikum.
Walaikum salam. Walaikum salam. Thank you very much, Mr. Intikab. So thank you very much for extending your sincere hands to upskill our future generation. Really appreciated. It's the good partnership that we have with CMA from a long time back. So I think we can renew our relationships, and thank you very much. So Mr. Indikab as well as Sandeep, and there are several other resource persons that is willing to help all our students free of charge, and for the betterment of our future generation. Thank you very much. Really appreciate it. So I think with that kind gesture, I think students, I think you all had got a very good session in terms of how to be successful, first-hand experience and success formula. If you have really followed to the letter, no one can stop you. And as Mr. Indikab told, the sky won't even be the limit. So then Mr. Indikab gave a very excellent account of what CMA as well as what it could help you to achieve. And myself being an FCMA, I do understand the importance and the opportunities that we could get. So with that, then we'll finish today's session. So let me again appreciate Mr. Indikab, Mohammed Indikab, for the CEO of CMA. Thank you very much for your